So, in terms of apologies, I have one notified apology. That's from Megan Fear. Okay. Move then to agenda item number 2, and that's the draft minutes. The draft minutes of the meeting held on the 6th of March 2014.
How are you? Good to see you.
We're public session. Okay. We're not come to you yet, you're very welcome. You just take a seat.
He does that everywhere he goes, Chair.
Aye. That's good enough. I'll have you there, don't worry. The draft minutes of the meeting held on the 6th of March 2014 are at page 5, and if members are content with the detail and accuracy of those minutes, agreed? Agreed. Okay. Now, next item, agenda item number 3, that's chairperson's business. At this point, as I mentioned earlier, I want to raise an issue which is of very major regional importance, and that was the breaking news last night that has been referred to at UTV in regard to the potential for the consortium involving FCC and Gilbert Ash to pull out of the proposal for the Policing and Emergency Services Community Safety College at Desert Creighton, Cookstown. I think while it is immediately the direct remit of Justice, and I'll be raising it later on there today, if any such move were to go ahead, I think it would be ludicrous, disastrous, horrendous, particularly given that this same consortium had last week, local papers full of it, a Meet the Buyer event where large numbers of local and indeed regional businesses attended, and where hopes were built up only to have them potentially dashed. So I really think, given the economic implications of this potentially, we need a lot more clarity around where this situation is. So if we could raise this directly through the normal channels, and presumably that goes via the Department of Justice or via the Committee of Justice, to establish just with some degree of clarity and urgency what the situation is, and if that involves us meeting jointly with the Committee of Justice ASAP to have a meeting on that, I would suggest that to members, given its importance. Yes, a number of people indicating yourself there, Sam.
Chair, I think that's very important. Thank you for raising that. I was on the policing board, and Desert Creek came up
yes,
nearly every month. Is there any particular reason given at this stage why they're pulling out?
Let's be honest, the detail on this is scant, and we're going on media reports and other snippets of information that are coming our direction, so it's important we get that.
Thank you, Chair.
Yeah. So, Sandra, then we'll come to yourself, Paul.
Thank you, Chair. I absolutely agree with your sentiments. The project's been limping from a delay to another delay, and the urgency. I think urgency
yes,
of getting answers is crucial here. And
totally.
Yeah. So I wonder, when we can get those answers.
I think it's ASAP. Just.
Yes, thank you, Chair. Yeah, this is critical. Some members might not realise this, but the companies that have been involved in the tendering and inquiring of this contract have already spent thousands and thousands of pounds, tens of thousands of pounds on tendering documents, on quantities, on risk assessments, and all of that work has already been done and laid. And they already have spent and invested tens of thousands of pounds, right from the main contractor right down to the subcontractors and then the specialist subcontractors. This is critical.
Yes.
This is vitally important that we see what has went wrong and try and rectify it.
It really was been seen as the tipping point for the economy locally, and to give it all a vital boost and a shot in the arm. And was seen, I can wear another hat as chair of the All-Party Working Group in Construction. People really saw this as an injection, a much-needed injection, at a crucial time for the local economy, for local suppliers, and indeed for the local towns. Incredible the position that we appear to be in at the moment. So much invested, so many hopes raised, only to potentially have them dashed. So the sooner we get clarity on it, the better. Fergal,
just to say and agree with you wholeheartedly that this isn't just a project for Mid Ulster, that and important as it is to Mid Ulster, this is a regional project, and I agree with you wholly. that something needs to be done to make sure at this critical time that injection goes into the system rather than get taken off the table.
Absolutely. So, members, Phil?
No, I have another topic, Patsy, sorry. Go ahead.
Chairman, I just say I think we all concur with what you have said. I think it's another example of a failure in project management. I think it can be a complex area, but it's an area that a lot of government departments have considerable experience in, and I think the whole procurement processes need to be reviewed. And I think we need to find out what is at the bottom of this, where the failures are, and what corrective actions are going to be put in place for further projects. The credibility of this Assembly, the Northern Ireland Executive and the PSNI, I think are at stake here, and I think it's important that this matter is resolved as soon as possible.
Yes. Thanks for that, Gordon.
Thanks, Chair.
Mitchell?
It's really just for information purposes. If the flaw here, or if the fault line is in relation to procurement, do we need to also ask the Finance Committee, because it's that department which would have responsibility for the Central
CPD.
Procurement Directorate?
Yep, okay, that's grand. So agreed then on accordance.
I just want to make another point. I was involved in the process, similar process in East Belfast, and the whole thing collapsed. And the problem was it took about 18 months to restore it again. So time is of the essence here. You think that the opportunity for jobs in that area. So if there's some way we can, when we find out exactly what the problem is, to ensure that the process is speeded up, because people will be starting from scratch again, literally.
We hope not. Certainly hope not. Okay, then agreed in the course of action that basically has been outlined that we notify Justice and also potentially Finance if there are procurement issues there, but that the thrust of this committee is that we have a joint meeting with Justice ASAP to get the details of what exactly is happening here and establish just what the solutions and the potential way forward are. Okay? Agreed?
Essentially, that's a formal joint meeting with the Justice Committee.
Chair,
Given its economic consequences.
just very briefly, if we can see if we can get any more information, written information in the interim. Just sometimes these meetings take a bit of time to set up.
That'll be important. I would reckon I'll be making the same proposal that I'm a member of the Justice Committee later on today, so I would reckon this is crucially important, this one. Can't be any dither on this one anymore. Okay, thanks very much for that, members.
That's it.
Well, yes,
Just on a similar vein, I suppose, news came out this morning that the DVA Centre in Coleraine and all the regional offices are to close. Mark Drucken has made that announcement this morning. So, on a similar vein, that's a serious blow for the local economy, for the workforce that work for DVA and for customers that use the service. And I suppose from this committee's point of view, in terms of jobs, when we have the First and Deputy First Minister away over in America trying to attract investment, we have a situation where the British government, with the stroke of a pen, are removing 300 jobs here. Which really flies in the face of everything that the executive collectively is trying to do. So I suppose the committee should take some sort of an interest as to how those jobs are going to be retained in the North Summer, because if 300 jobs are taken out of the public sector, where are they going to go? That's going to have a serious impact on the local economy.
right. Well, and likewise, a lot of us have lent our support, and I know cross-party support has been there to try and lobby to make sure that the service wouldn't be transferred over to Swansea. In the first instance, I think probably what we need to do there is two courses of action. One is through to the DOE, because they're the host department for a lot of these people, and the second is through to DFP, the central, if you like, pool for the civil service, to see if those people or those positions can be found accommodation elsewhere within the civil service. So are members content enough that we pursue that course through DFP committee and DOE committee to establish, just to make sure that people aren't really losing their jobs as a result of this, and that the other positions are found for them elsewhere? Agreed?
Chair, I think we would concur with that. I think it's a slap in the face to democracy within Northern Ireland. We've had a very much united campaign across all the parties, and there's been a strong front put forward lobbying for these jobs. They're civil servant jobs. People have good pay and good conditions. They've done given an excellent service for many years, and I think it's very unfortunate this is the case. I think it's important we lobby to make sure that these people are accommodated within the Northern Ireland Civil Service or other government agencies. and obviously it's impossible or difficult for them to up sticks and to move to other parts of the UK where these jobs may be relocated. So effectively we're losing 300 jobs, a major blow, and I think we need to take action on it. I would support what you're saying, Chair.
Okay. Agreed
Thank
then.
you.
Thanks for that. Okay. Now, just one other thing then. The FCA, in terms of the FCA, recently just had a conversation with someone. I didn't realise this, the Financial Conduct Authority. They have a specially assigned resource to Northern Ireland here, or an officer assigned to Northern Ireland here. And really, I think it would be helpful if at some stage we had a briefing from that person. Apparently they accumulate stats around banking services, bank lending, all those sorts of things, and given banking expenditure and the likes of that, but given also that the FCA still hasn't provided us with a copy, or provided anybody potentially other than within the Ulster Bank, a copy of their findings about the referred to glitch that someone made, which affected thousands and thousands of customers back in 2012. We still haven't got the outcome of that report yet. So if members would be content that we invite that person or persons responsible for that to brief this committee. Agreed?
Great.
Thank you for that. Now, next item is agenda item number 4. That's an oral briefing from the Irish League of Credit Unions and the Ulster Federation of Credit Unions on the Credit Union and Industrial and Provident Societies Bill. And papers for this item are at page 12. We have the clerk's briefing paper from the Irish League of Credit Union, briefing paper from the Ulster Federation of Credit Unions, summary of responses to the Credit Unions and Industrial Provident Societies Bill, and a Hansard transcript from the meeting on the 27th of February 2014. That's at page 71. Now, before the committee today, we have Brian McCrory of the Irish League of Credit Unions, Eula Adair of the Irish League of Credit Unions, David Dowie of the Ulster Federation of Credit Unions, and Chris McCreary of the Ulster Federation of Credit Unions. You're all very, very welcome indeed, and thanks for joining us here today. It's good to see you again, and I would like to just, particularly before we do start, pay tribute to the invaluable work that's carried out by credit unions locally. And I was up last night in Arbo and saw some of the proposals for their brand new building up there, and really a great investment, powerful building, lovely design work and everything, great investment in the local community, which is very positive news. So, you know the format for the committee here, you would have been provided with it. You have up to 10 minutes to present to the committee, and then we have a question and answer session with yourselves, and we'll be picking up on some of the issues as we work our way through them. So, again, you're very welcome. I don't know what sequence you've agreed, I'm sure, of speaking here, but who's going first?
Would you like to go first?
Now, that's up to 10 minutes in total. It's not up to 10 minutes each. In case
it was 10 minutes each. Will we give us?
On how you?
Well, Chair, I'll start if you,
right, okay,
if you're happy with that. Good morning, Chair and members. My name is David Dowie. I'm the Chairman of the Ulster Federation of Credit Unions. And could I thank you for inviting us here this morning, and indeed for the last session where you kindly took the interest in the provision of new legislation for Northern Ireland. We're most heartened by the work of the committee, and we think that this is going to be an invaluable piece of legislation for us. From the last session, we have continued to meet with our colleagues in the Irish League of Credit Unions, and indeed with other credit union representative bodies in the rest of the UK. And I think it will come as no surprise to you, Chair, that many of the issues which we have been discussing with the committee we have similar views on, and again, as I say, that's not surprising, bearing in mind the issues that our communities face are the same. And consequently, as we go through the question and answer session, you will see a lot of unanimity around the issues that you have raised and questioned us on. I'm not sure that there's anything more that I can say. You have our briefing paper from the last session. I'm simply offering now the opportunity for the members to ask questions of me.
Okay.
And perhaps, Brian, you want to give your
Brian,
statement
or
first?
if you have anything further to add, or we can move direct to questioning.
I think David has said everything we need to say by way of introduction, and I'm quite happy to move to.
Okay, that's grand. Thank you for that. We've range of speakers here. The first one is Mr. Douglas. Femi.
Thank you much, Chair, and thanks very much for coming this morning. And I'm sure you're aware that the bit we had in the Assembly, there was all-party support. It's very unique for us in a lot of these debates. That was all-party support. And certainly, as the Chair has said, that I think everybody pay tribute to the work that you do. I've just a couple of questions in terms of community development. I'm not quite sure who I direct this to. But the Ulster Federation, maybe it's yourself, David, that you would be supporting the relaxation of the dividend limit, which would provide some additional scope to apply some surpluses for charitable purposes.
Yes.
Could you maybe just elaborate a wee bit on that, please?
I think the position is that if we have a limit, it inhibits the credit unions from providing money to charitable causes. As we already outlined before, in the current economic circumstances, credit unions are suffering, like all financial institutions, in terms of the profits that they're making. And obviously, the difficulty then is that we can't give more to charitable and cultural causes. If the limit's lifted, then that allows us to give something back to those causes, albeit it might be very little, but it's still something which may encourage them in the work that they do. So from that perspective, we're quite happy with the proposal to lift that limit.
And I suppose part of that community development would be in terms of training people, in terms of financial help and financial direction, giving them the tools, the money.
It could be a whole range of things. For example, you may have a mothers and toddlers group in the community who may need a certain piece of equipment or materials for the mothers and toddlers, and if we are able to give a small amount of money to them, it may go towards helping them to provide those facilities.
Final question. In relation to faith-based groups and churches, that a number of those churches wouldn't take lottery money as an example. And you know yourself that many of those churches are doing great work at the moment in terms of food banks. That's an example. And I would know some of the churches are encouraging people to join credit unions.
Yes.
Where does the credit union movement stand in terms of support for churches? The reason why I ask it is that some charitable trusts won't fund churches, per se, because of it's a religious aspect to it.
Okay. Sir Grant, you want to answer that?
Yeah, within the structure that we have, it's up to the annual general meeting of each of the credit unions to decide where they might allocate whatever charitable donations they might have. And that could well be a church group. It could be Green Shelter would be a popular one. You know, there's an entire range. But really, what we're here to lobby for is the removal of the 3% cap, because that debilitates everything. That takes everything outside our control. And the financial regime that sort of has reigned since 2007 is essentially, it's almost made it impossible to allocate those funds in the way that members might desire back into the local community.
So Brian, yourselves and the Federation are in agreement with this then?
Absolutely.
Yes.
But on the question you asked specifically, by the way, credit unions do actually contribute to things that are run by the church and done by the church. They do it by the way of from their own particular boards, but the fact that we're only allowed to do a certain amount, we're limited in what we can do, and therefore we can't be given big lots of money. And the problem is that the cake that we bake is so small that it's spread very little across the board, hence the reason why we've been arguing. And part of our submission was that, from the Irish League's point of view, that one of the things that we should be doing in legislation, we should be looking at the actual voluntary aspect of credit unions, and we should be looking to see about whether or not there could be some acknowledgement about the tax situation of that, and that the tax element of it would be reduced for credit unions, because we're paying the same as a bank. It's actually paying, we pay the same corporation tax as they pay. And we should be getting some of that reduced to allow us not to pay bigger dividends, but to actually do it for more charitable causes. Because bear in mind, that was what the credit union was set up initially to do, was to actually put money back into the local communities in which it's in. And if you take it I suppose I'm being parochial here when I talk about there's 4 credit unions in Derry, and I think if the 4 credit unions were coming together, there's lots of things that we could do on a community basis that if we were allowed to do them. At the present time, we're not.
And it isn't just about charity, it's about social investment.
Yeah.
Yes.
Yeah.
Okay, thanks. Thanks, Sean.
Yeah, to answer your question further, Mr. Douglas, could I just say that the credit union movement has no issue with making grants to church organisations or to churches per se, but as you'll be aware, there is some reluctance among some churches to accept the work that the credit unions do, because in their eyes we're still seen as part of a system of usury, despite the fact that we're grounded in the community and all our profits go back to the community and not to anywhere else. And just to follow up on something that Yul has said there, in terms of where the credit union gets its profit from, as you know, we get our profit from the money we have out on loan to our members, and that is, apart from investment money, is the sole source of our money. And as he's alluded to, we pay heavily in corporation tax, but we also pay heavily in terms of rates. So our buildings are all subject to large rate bills, and if those rate bills were reduced or removed, and if the corporation tax were reduced or removed, that would give the credit unions much more money to put back into the social economy.
Okay, certainly note that, Chairman.
Okay,
Just to
thank you.
supplement that, if I may, it's interesting to note that in the last round of things, we actually paid more tax than what Google, Starbucks and all those paid together. We actually paid more tax.
Thank you, Sam.
I'm going way off
That's
for
me,
a
Chair.
bench
Thanks
next now. Okay, Sam. Mr. Gunn. Mr. Dunn.
Thanks, Chair.
Sorry, Gordon.
Gentlemen, thanks very much for coming in again. I know you've been in here before, some of you, and others that are new are most welcome. I've been asked to, or going to ask in relation to the age limits on membership and so on. Perhaps there's a difference between your opinions on it, but that's what we'd like to hear. People under 16, there's an issue of them becoming members of the credit unions. From my perspective, I think it'd be important to try and refresh the image of credit unions, engage with young people, try and get them on board as early as possible, and make the credit union a trendy place to go. It is a challenge, and perhaps that's one of the reasons as to why some of you are trying to lower that age. So I'd like your opinions on that issue, and the other one is in relation to being an officer within the credit union.
Okay.
It's, at the moment, I understand that's 18 plus. So I'd appreciate your comments on both of those issues, please.
Chair, the age limit currently is that you can be a junior member up to the age of 16, but you can't borrow from the credit union until you're 18. Now, that seems sensible, bearing in mind that if you're a 16-year-old, there are certain risks attached to lending money from a credit union perspective. And if you're a 16-year-old, the credit union will want to see proof of your income and how you're going to pay for the loan. So from that perspective alone, it doesn't make sense in our mind to allow 16-year-olds to be able to be full members of the credit union and to borrow money. So we wouldn't be terribly in favour of reducing that age limit for full membership down below that age. We also have problems with the notion that someone of the age of 16 could quite properly become a director of the credit union. And there are a number of difficulties around that. First of all, it comes back to life experiences and knowledge and experience of how credit unions work and operate. And it wouldn't be fair on a 16-year-old to expect them to have that knowledge and that experience. And apart from anything else, then, since we've been taken over in terms of regulation by the PRA and the FCA, there is a serious onus and burden on directors of credit unions now in terms of how they are regulated. And to expect someone of 16 to be able to go into a meeting with the PRA or FCA and not just understand the questioning, but to give a rational response to them would be very difficult. So from that perspective, we wouldn't be very much in favour of allowing anyone below the ages of 18 becoming directors. quite happy to answer any other questions you might have.
But on the issue of younger people, I mean, there is a lot of opportunities for younger people to be involved. As say, in my experience, I was a teller from about the age of 12, so was there and able to assist with the running of the computer system and different things like that there. So there's plenty of opportunities for younger people to get involved in credit unions, but not necessarily be directors until they're 18. We think that's fair and prudent. We also do a lot of outreach into schools. I mean, we done a breakdown of our membership of a number of our credit unions. We were surprised to see that there was actually a disproportionate amount of younger members compared to older members. You would have traditionally thought that most of our membership would have been, over the age of 50 or something like that there. But we actually saw that a lot of younger people, more so, were taking up credit union accounts. So there are a lot of opportunities for younger people to be involved in credit unions. This issue is around whether they're allowed to be physical directors, and we would be of the position that it's a lot of pressure for a 16-year-old to be in front of groups like the PRA or have to deal with regulators, where we would rather have them see them in a position where they can volunteer with a credit union as a teller, and then with a view then to becoming a director when they're 18.
Okay. You want to make any comments on it?
Yeah, well, I will do for you. There's a number of issues, really. The issue about bringing the membership on to the age of 16 produces a number of legislative conflicts, that in itself, in relation to lending and the enjoyability of the full rights of membership. We would have serious issues around that, which has already been recognised publicly, the protection of minors in statute. The other and the more fundamental one really would be in relation to 16-year-old directors. And I think we would strive to promote, include and develop young people and actively explore innovative ways of building participation. But it's unfair to expect a 16-year-old to accept the legal fiduciary responsibility of being a director of a financial institution. He'd be expected to conform to all the standards, norms, levels of knowledge, expertise and understanding as a person of long-standing experience. And I think that's an unfair imposition, really. It's not that in any way I doubt the competency or capacity of young people to learn. I just don't think that at that age they would have acquired necessarily the same degree of responsibility, let's say. And that's probably qualified and so on.
Just the other thing on that as well, I think it's important to remember that the credit union movement does actually operate with a junior committees, in as much as that they actually have people who are in position as a side board who are actually looking there at how the credit unions are actually run, and you've got them as what they would call committees that actually run an imaginary credit union, but are doing it through the situation. Although they've some input into what is actually happening as regards to the premium monies that are going into where the credit union are actually saving. But I think, gentlemen, ladies, if you look at the actual thing in America, one of the things that we certainly don't want here is, in America, they actually introduced the thing that you're talking about, that young people could actually borrow at the age of 16. It actually transpired that there was more people leaving university with bankruptcy notices in their pocket rather than they had degrees. And that's history. That's things that you can actually check out. Bearing in mind that one of the things, the criteria for lending money is the person's ability to repay. And really, we would be hopefully encouraging young people to actually participate in the credit union by way of doing stuff, such as been mentioned here, tellers and things like that. We wouldn't be encouraging them to take loans, because the only people that could actually repay those loans would be the mothers, fathers that are in the position to actually repay those particular monies. That's one of the reasons. And again, coming back to quality of life, young people at the age of 16 would not be in a position, in my opinion, to have the wherewithal to actually run a company that maybe has a turnover of 10, 15 million pounds. They wouldn't at that stage. They're not well enough out in life to actually be able to make those decisions. I mean, for example, they would have to make decisions on whether somebody could borrow £20,000 or not. And those are decisions that young people at the age of 16 years of age should not be asked to make.
Okay, thanks very much. Thanks, Chair.
Just picking up a wee bit on that, the proposals for industrial and providence societies, are that membership at the moment is restricted to persons over 16 years of age, but the department is making flexibility there that a particular Providence Society may establish its own rules if anybody can join at 16 or less. But in regard to holding office of an IPS, the department is saying it is proposed to reduce from 18 to 16 the statutory minimum age at which persons can hold office in an IPS. Do you see any sort of inconsistency between that proposal and the view that you're given? And I'm even thinking there of the likes of, I don't know, affiliate or school-based credit unions and the likes, where the sort of experience that you're talking about, you that may, or I've seen some cases, isn't absent. I've seen some young people out and about that can buy and sell you, literally, and quite astute at doing that by the age they had 16. Do you see any potential for a mentoring project or something which, whenever those young people arrive at the age of 16 or 18, they're well enough clued in as to the decision-making processes around the credit union movement, either by an affiliate programme in schools or through schools, or even school-based credit unions?
What I'm saying to you, Patsy, is that most credit unions are operating in a situation where they operate a junior committee.
Yes.
Which is to try, and for the want of a better word, to actually have build it in so that those people will be in the future will be able to come over and take over the credit union. But at the age of 16, we believe going over at that stage is too young. They should be given a longer period of time. Hence the reason why we're saying 18 would be good enough to come over and come on the board at 18. During that particular time, they would be in part of a junior committee that would have seen how the credit union was running. They would have actually been, for the want of maybe, I'm sure you'll understand when I say buddy training, from people who are actually on the board of directors, of having training that they're putting people in place so that they're in a position to actually take over from the directors that are actually there.
Thank you. Stephen, you wanted to come in on
Yes,
this?
just on this point, just to clarify something, because you've rightly identified that with your loans process, ability to repay is the key issue. Why then, in terms of the membership as opposed to the officer positions, why then in terms of membership do you need the age limit? If the issue is ability to pay, and I can certainly think of instances where 16-year-olds would have the ability to repay, where they go straight from school into employment. If you're confident in your screening process for loans, why do you need the age limit as well?
Well, I think there's someone that maybe we failed to tell you at the start, is that if you're in the 16, I mean, you can borrow in the credit union if you're 16 years of age, but you have to have the amount of money in to borrow your money. So if you had £5,000 in savings in your credit union, you can actually borrow up to £5,000 at the age of 16. Okay. But it's over a particular period of time. So we're not saying they can't borrow at all. All we're saying is that at the end of the day, they can't borrow somebody else's money at that particular stage. You couldn't be asking them, as I said to you before, you couldn't ask a young lad of 16 years of age to be taking a loan out of £20,000 and expect that young fellow to be in a position to actually be able to repay that money. That's, in my opinion, you'd be putting an intolerable burden on top of that young lad at 16 years of age, and it would all fall back on his parents.
But equally, it's about democracy. Once a young person becomes a member, they enjoy the full membership privileges. There's no halfway house. So if he becomes a member, he's eligible to offer himself for election, and he also has access to all of the other services as an equal, a co-equal amongst. So, and that's where it starts to get separated out, and the difficulties start to arise.
Sir, could I just add something to that and say that the position in schools is very much that credit unions try to train the pupils in how we manage our credit unions, and we rely on them to a certain extent to run that side of the operation in the schools, and that gives them a good basic training as to how the credit union operates. Yes. But there are a whole myriad of regulations beyond that they wouldn't necessarily be aware of. And it takes some considerable time to become aware of those and how those are operated within the credit union movement. To expect a 16-year-old to be able to do that, I think, is just a step too far. So we wouldn't necessarily be in favour of that because of that issue.
This is purely in relation to being an office bearer?
Yes.
Right, okay. Thanks for that. Mr. Anderson.
Thank you, Chair, and thank you, gentlemen, for
from my larger presenters this morning. I want to raise the issue of dissolution of credit unions. The manner and the way maybe that could be progressed in the future. At present, a solvent or non-credit union wishing to dissolve must prepare that instrument of dissolution, and it has to be signed by not less than 3/4 of the members of the society. I note from your responses here, the Irish League, they thought in some way that may be abused if they went down that way. I note that the Ulster Federation were wanting or wanting to provide a more flexible approach, would find it more practical and helpful. And then in some ways if we got agreement on this, maybe nothing would take place. Could you both expand a wee bit on why you took different lines in that to begin with?
Well, I think, Chairman, I'll answer that for the Federation's perspective. You're absolutely right. We thought that our view was that there was likely, bearing in mind the new regulatory regime, be a realignment or a resettling of the credit union movements, and that there would be likely to be some smaller credit unions that couldn't exist in the current regulatory framework, and therefore our concern was that it should be easier for those credit unions to first of all amalgamate if that was their choice, but where they couldn't, then dissolution should be an easier option for them. And our experience looking at some of the independents that have had to dissolve was such that it became it was difficult for them, bearing in mind that you have to get, as you say, 3/4 of the membership to sign. However, we've had further discussions with our colleagues in the Irish League, and we've had further discussions with other credit unions and other bodies in the rest of the EU, and we've come to the position now where we agree with the Irish League's position on this, that there's no point really in changing the current situation, because you can get a situation where certain individuals could together force a credit union into dissolution, and we think it's important that the membership have the control over whether or not their credit union dissolves or stays going. So from that perspective, our position has changed slightly, and that we would support the Irish League position.
I think it's also bearing in mind, Mr. Anderson, as well, is that this legislation was actually cut and pasted out of the English legislation. And when they were actually dealing with this part of the legislation, they were dealing with two different things entirely. I mean, the credit union movement in Britain is a very embryonic organisation, and is really in the process of only starting up. We've been going here for a long, long time. And the reason that a lot of dissolutions came about in England was the fact that credit unions couldn't keep going because they never actually encouraged the people to actually save money. And therefore they were actually borrowing money from the local authorities, such as we will call here our councils, to actually lend the money out, and that they didn't have the seed capital of themselves to actually bear in mind, where each credit union in the north of Ireland has had to do the thing from their own resources. It was all of the money that's in a credit union actually comes from the members itself. It doesn't come from anywhere else, and therefore it is a members' money. Now, in the instance here of a credit union actually being disillusioned, the only way I would say to you was that if you look at what happened in Australia, there was a situation where a credit union in Australia was actually down to being disillusioned. They actually dissolved the credit union. It ended up that the directors on that credit union ended up of actually having the excess assets that the credit union had and divided it up among themselves. And it turned around that they were actually getting millions of dollars out of it as a result of that. And that's all we're saying is that that type of thing should not be. We should make sure that that doesn't be allowed to happen here. That we can't get it down to a situation where a few can actually dissolve, and that because credit unions at the present time, by the way, have enormous amounts of money in their general reserve, and if everybody is actually paid out and they all got their money back, then the general reserve is then divided between the directors. And from a point of view of that, we do this in a voluntary capacity. We don't do it for actually gain. So therefore, we should never set the thing up in a situation that gives anybody the opportunity to look at whether or not that could happen or not. And I would urge you to support us on that instance.
Okay. Right.
To your point, your point that it's more or less as you were, but you haven't had a situation here that would have warranted the three-quarters signature in the past. Is that right?
Well, we haven't. I think it's worth saying that in the north of Ireland, I speak mainly from the Irish League of Credit Unions, and I can't speak for the Federation, but I'm sure the Federation are in the same position as us. Since the credit union movement started in Ireland in excess of 50-odd years ago plus, there is not one member in the credit union movement has lost one penny piece as a result of their involvement. We've been in the credit union, and therefore we've never come to a situation whereby a credit union was forcibly dissolved. And I think that has been come about because of the good practices that we put in, and because, as I said to you, the foundation blocks were put in. It's like building a house. The first thing you have to do is make sure you put in good foundations. And the credit union did that by putting in good foundations. And we also have been monitored regularly by the Irish League of Credit Unions over a particular period of time, where although we're all autonomy credit unions, we follow the guidelines that are laid down by the Irish League of Credit Unions.
Okay.
Can you see, if it was a case going forward that this would be an issue? You talk about losing contact, and we talk about not being able to make contact with those three-quarters. Would that be an issue going forward in the future, although it isn't now? Could you see something arise in the future where it would be an issue?
No, I don't know. I think the credit union movement now is in such a situation where they have to keep in close contact with their members even a lot more now than they did in the past, because we're under the
technology.
Because of the fact that if you don't keep in contact with them now within, I think the period's 5 years. If you wait for 5 years and you're not in contact with a credit union, then your account becomes dormant. And in that particular situation, the government can actually claim your money after 5 years. So there's a big effort to make sure that people are aware and that they're kept up to date and where they actually are.
There's an additional level of protection now, Mr. Anderson, in that whilst the Ulster Federation and the Irish League both had reserve funds where a situation arose where a credit union was being dissolved, and those funds could have been made available to help anyone get their money back if there was a threat to their money. All the organisations now are required to pay fees into the Financial Services Compensation Scheme. And with the Financial Services Compensation Scheme, as you know, everyone's guaranteed their money back, their deposits back up to £85,000. So, you know, as far as that's concerned, we're well covered. But one of the side issues in respect of that is that every credit union has to have what's called a single customer review file, an SCV file, and the FSCS monitors that file very closely. The file contains all the personal data of our individual members. When I say their personal data, their names, their addresses, their dates of birth, particularly their postcodes, because the government has vowed that if a credit union does fold, then the FSCS will pay back everyone's deposits within 7 days. And the important issue there is that that file needs to be up to date, so we won't lose contact with our members, or we will know what their last address was.
Okay, gentlemen.
Okay, thanks.
Thank you, Chair.
And Portadown Diamond, was it dissolved?
It wasn't dissolved, it was wound up. It's my understanding of it.
Just explain the difference to me.
Well, I think they had to bring in an administrator to actually wind the credit union up rather than to dissolve it. A dissolution means that it's a voluntary winding up. In that case, I think they actually had to bring the administrator in.
Okay, thanks for that.
No one lost
Mr. McKinney.
No one lost out.
No one lost out. No, sorry, Chair, I should stress this.
No one lost out.
As Mr. Anderson says, no one lost their money as far as that was concerned.
Oh, well, I'm aware of that bit.
It was an independent credit union, but it wasn't a dissolution, it was a winding up.
But that was back to the scheme that you've just mentioned there.
Yes.
It wasn't anything to do with how efficiently the credit union was in that particular case. It was due to the scheme which had covered and gave the protection to its members.
Yes.
That's okay. Thanks for that. Mr. McKinney, Fergal.
Thank you, Chair. I'd like to touch on two issues, separate but closely linked. The first one is around the amending the rules of the common bond, which DETI has rejected and the Federation hasn't supported. But feel free to come in on that. But from the Irish League's perspective, you saw some benefit to it. What does the Irish League see as the key benefits in introducing this enabling provision, if you like?
Well, I think, Fergal, from that point of view, what we saw was an opportunity, if it came about that two credit unions wanted to amalgamate, that they could actually amalgamate and keep the common bond that they each individually had, and therefore the new entity would be a bigger common bond. And they wouldn't, in the past, if that was going to happen under the DTNI, you weren't allowed to do that. If you amalgamate so for example, if Waterside amalgamated with Pennyburn, then Pennyburn would have kept their common bond, Waterside would have lost theirs. Whereas if Pennyburn and Waterside now came together, the common bond for the new credit union would be Waterside and Pennyburn be together. And we saw an advantage that could well be a situation. Plus the fact we also saw the situation where people are coming to work as well, of course, that the common bond in most credit unions is either you work or live within the common bond. And if you move out of that particular area, is holding, you can hold up to 10% of your members that are outside your common bond. So that was why we saw it as a situation that would allow you to, in the event of an amalgamation, the two credit unions coming together could actually have a common bond.
This question is sort of, if you like, reflective of need. If that enabling legislation wasn't there, would that be damaging from your perspective?
Yeah, that particular situation was something that Derry had always insisted was, as I said to you, that if Waterside and Pennyburn had amalgamated, we would not have been allowed to put together the two common bonds, whichever credit union was being the one that was going to be in situ. For example, a common bond would have been only the common bond that Pennyburn would have had. Whereas this legislation would allow a situation to come about where the new common bond would be Pennyburn and Waterside.
I have a note here which reflects the Detty's position as seeing it as diluting the common bond. Is that language that you would agree with or disagree with? The potential for this enabling legislation, is it diluting the individual union's common bond?
I'm one of the people who, on a personal capacity, Fergal, believe that it's important that credit unions should be there for everybody within particular areas, and I don't think at the end of the day that they should be disenfranchised because of where they live, of being able to join a credit union. So it's important that I don't see that as a dilution. I see it as a situation whereby if we took Derry are actually doing that at the present time, they're actually stopping amalgamations because if people would actually lose the common bond and being able to do it. So in that instance, it's not diluting, it's actually strengthening the common bond. But what we don't agree is that it's we don't agree on one common bond for the whole of Ireland, like for a situation like that. We don't agree on a common bond. We still want to maintain the situation whereby you're in a community and that you actually know the people that are in the community, because that's the most important things it's about credit union, is that it's a community-based organisation and everybody knows everybody else as far as possible within that common bond. But don't forget we're becoming much more a pluralistic society at the present time, and there's a lot of people coming in that you don't know, but they're still are welcomed into the credit union movement and have to make their way within that.
I think from our perspective, the Irish Legal have already articulated their views on this quite well, and in that explanation they did explain that the common bond issue was much more applicable in England and Wales and Scotland than it is in Northern Ireland, because we're much more well developed here. There you can have a massive common bond because of the scale of operations there, and obviously we are much more geographically limited, or in a much more geographically limited position, and we're already seeing some tensions around credit unions which are working with common bonds beside each other, and there can be issues around territoriality, for example, and we would want to see the situation retained. If you relax the common bond and you make it something else, then, as Yuel has said, you do then lose this sense of belonging, community, whatever binds your community together, and you can lose that. And again, in Northern Ireland, I don't think there's a scope for larger common bonds, to be honest.
Could I just hook it back to the previous question, Mr. Anderson, around dissolution or amalgamation?
Yes.
And would amalgamation be a preferred option? And would therefore this piece of legislation not ease that outcome?
Sorry, Grant, do you want to answer that?
From our point of view, that's precisely where we would see the particular benefit, where two willing partners want to co-join and to produce either something of a larger asset size or to be able to offer an expanded range of services. For example, a professional credit union, such as one I represent in a different capacity, and a community-based credit union, and it's stitching together both common bonds, and also in a situation where common bonds may overlap. It allows for the co-joining, really, and an expanded common bond rather than being of a restrictive nature.
Okay. The second issue is around the deferred shares, which I understand would be transferable. if a member holds deferred shares and wishes to transfer them, would the person to whom they're transferred have to share the common bond?
I think this was an issue of contention at the last session, and as I understand it, the officials
Seeking legal advice.
were seeking legal advice, and I'm not sure if we've had any response to that
What's
yet.
what's your perspective?
My own perspective would be that, and again, this is just my personal view again, that if someone transferred deferred shares to a relative, for example, on their death, that there wouldn't necessarily have to be an inclusion in the common bond. That's my own view. There wouldn't necessarily have to be an inclusion in the common bond. In other words, the person that was receiving the deferred shares wouldn't necessarily have to be within the common bond of the credit union. That would be my own view on it.
Sorry, just to be clear, would not have to?
Would not have to be a member, or sorry, no, would not have to be within the common bond, because the shares, when they were originally taken out, were taken out by that individual in good faith as a member of that credit union within the common bond. Due to their unfortunate demise, they can't help what happens then. Circumstances have changed, and it would be unfair to penalise the recipient of the deferred shares, in my view, simply because they didn't live within the common bond or didn't fulfil the conditions of the common bond. Again, that's a personal view, I have to say, Mr. McKinney.
Coming back again, Fergal, on that particular point, I come back to the situation whereby this was cut and pasted out of the legislation that was in Great Britain. There is absolutely no need for this split part in the Irish context at all, in as much as that anybody that would put deferred shares into a credit union, bearing in mind the issues with them, can I tell you to be mad in the head to actually do that. But what they were done in the situation in England, they were actually put in England for a situation to allow councils to put money in to a credit union to actually start it up, and hence the deferred shares came in. They could never get them back, by the way. They were in there all the time. And I mean, if anybody, there is no place for deferred shares in legislation here in Northern Ireland whatsoever, because it would be crazy for somebody to put shares in a credit union and say you can never get them back out again.
It would certainly seem strange. We would support that position. It would certainly seem strange if anyone would put deferred shares into a credit union in Northern Ireland. I really can't understand it.
Just explain the just for the evidence purpose.
Well, again, as Yuel has,
if you like.
No, as Yuel has explained, you can't get those shares back out. So why would you put money into it, except unless you were philanthropic and you wanted to help the credit union expand?
But you can. But you can transfer them. Oh, sorry, you can transfer them. The person who
unless something
can take them out.
No, unless someone dies, I think is the issue, and then there's still some doubt as to whether or not
you actually can get it out in the end. So what's the purpose of Daddy accepting it then?
Well, as I said to you, at the end of the day, they actually just cut and paste that legislation in from Ireland, and they brought it in here with respect. And I don't want to be critical of Daddy at this stage in case all the bottles come flying down at me, but at the end of the day, I'm saying in this particular situation that that's something that has no relevance in the movement in the north of Ireland at all. Okay. And therefore, as such, I would ask you as a committee not to support that type of, to me, because it's a crazy situation.
It's also perhaps injurious to the credit union itself, in so much that the credit union would then has to provide an equal amount and allocate that to its reserves.
It's general reserve.
So there is absolutely no appetite in either sector, part of the sector credit union movement, to have the introduction.
Well, following on from that then, is your view, and the committee will come to a considered view, that just should be removed altogether?
Yes,
correct. It should be cut and pasted somewhere else.
Cut and paste and take it out.
That's grand.
Cut and don't paste.
That's grand. Fergal, you finished.
Thank you.
Just picking up on, to get back to the common bond there, and the dilution, any potential dilution for member-based organisation credit unions are exempt from the EU legislation in governing banking. Now, if there's any dilution, and I think we had this in a previous evidence session, any dilution of the common bond, potentially that could take you in the direction of falling within the remit of control of EU banking laws and regulation the likes of that.
That's not been the experience elsewhere in Europe.
It hasn't been?
No.
Right. Okay. That's grand.
I say that with some knowledge. I represent the Irish movement in Brussels.
Right, okay. That's clear among all of you.
Yep. Absolutely.
Okay, thanks for that. Mr. McLaughlin, Mitchell.
Yeah, thank you. And actually, that's my kind of general area of interest. And I mean, it's good to see just that the original ethos of the movement is actually surviving this kind of process, and I think it is good to periodically revisit. But I think it's important that the original ethos shines through and provides the guidance. In relation to the 10% limit on non-qualified members, you know, people whose original common bond conditions had changed for one circumstance or another. We were given examples of people perhaps relocating or whatever. Now, the entire movement has actually supported at least the facility, the enabling of credit unions at their own autonomous level to remove that requirement. I'm interested to know, in terms of the history, you know, your shared history in this respect, was there ever a set of circumstances where it was found to be useful and prudent that that limit had existed? I'm thinking in terms of, say, caucuses emerging and people attempting at a local level to achieve predefined outcomes.
I think we can be quite categorical on the Ulster Federation side of things. That situation has never developed for us. We've never experienced it at all. And I can't envisage a situation where it would, to be honest. But again, things happen.
You've been around for...
I think the ethos of the credit union movement...
You've been around longer than me, and I've been around a long time.
The ethos of the credit union movement is still the cornerstone. And as I said to you before, it is still the foundation on which we're built on. And the day we move away from the ethos of the credit union, we have lost the credit union movement. And it won't be, as I've always said to regulators, I hope we don't wake up some morning and the regulator is out of business. But on the question that you pose about the 10% has been an advantage to credit unions to actually allow them to maintain people who actually worked or lived within their common bond, who actually moved out of it. I mean, you would know yourself, coming from Derry, that how close-knit the community is, that your mothers and fathers actually joined you in the credit union when you were young yourself, and they carried your book until you were a particular age. And just because you moved away out of that particular area, you wanted to stay a member of that particular credit union. And I think the 10% was a very valued aspect in that position, that it allowed the credit unions to keep 10% of their membership who were outside the common bond still retained in it, rather than to have to transfer them to another credit.
Yeah. So an issue, a problem didn't emerge when you had the 10% rule. But what if a local credit union changed that as they could under the enabling legislation, say, and raised the limit to 20%? Do you see a danger?
No, but I think that just simply recognises the increased level of mobility within the geographical confine of Northern Ireland. People have to travel outside what would have been historically been the case. It wouldn't be unusual, I mean, where I work, for people to come from Lougheed, Strabane, Newry, and that's working in Belfast.
Yeah.
You know, so...
I'm working in Southampton at the moment. The point I'm teasing out is whether, you know, the original kind of common bond issue, which I think was virtually the statement of the reason, the debtor for the credit union, could it be replaced with a common purpose, which mightn't necessarily be in the interest of the...
If that happened, Mitchell, it would be a step back, and it would be a retrograde step if that actually happened. And I think, for example, hence the reason why I came about and said to you, it wouldn't be in our interest to have an open common bond that would allow people from anywhere in the province to actually join, because of the very fact that there wouldn't be a community-based situation and they wouldn't know people within the community when you'd be coming in. Whereas before, you're actually keeping people who you know and are part of it, and they're being part of the situation since they actually came about. And I don't see any credit union, by the way, looking to upgrade that from 10% to 20%. If you take it that way, the next step is, well, do we need 20%, do we need 50%? I think at that particular stage, that's a manageable figure. I mean, you take a credit union that's, like Derry has got 25,000 members. That means that for 10% of them, 2,500 of them can be actually outside the common bond. That's a hell of a lot of people that can be outside. In our own case, you could have nearly 1,000 that would be outside before it would be situation. So it's not something that's not unmanageable, but to actually go bigger than that would be.
Could I just
but under the new legislation, neither the League nor the Federation could prevent a local branch.
Oh, they can.
They raise that.
Yeah, they can.
They could.
Yeah.
How could they do that?
Because at the present time, all you're allowed to do within legislation is have 10% of your membership.
No, but the proposition will remove that.
Yeah, but we're actually saying that shouldn't be removed. Are we not?
No, we're saying it should.
No, we're saying it should be removed.
Could I just add something to this? There is
You might want to clarify your position, because this has all been Hansarded on that, you know.
From our position, we're happy to have the 10% removed, because there are more people now mobile, moving outside their existing community. The point, Chair, I was going to make is that in respect of this wider notion of common bond, there's a difficulty around that from an anti-money laundering perspective. The money laundering regulations in Northern Ireland 2007 actually deal with this issue.
Yes.
And, for example, some of the banks, the FSA, fined them because they couldn't adequately identify their members. Now, we're cognizant of the fact that people do move, but they do have this allegiance back to their original credit union.
And very often will have retained.
And exactly that. And the credit union will know who their members are, and from that perspective, and from the money laundering perspective as well, we suggest that it is possible to remove the 10% limit, but people will always want to come back to the common bond.
I mean, it's worth remembering too, the 10% limit was set, I think, in the 80s, and demographics have changed a lot. A lot more people go to college, younger people move away. Social mobility is much greater now than what it was back then. From my own credit union's perspective, we'd probably raise that 10%, actually maybe up to 15%, because we notice a lot of our membership who join at a young age, they all go off to college and they might live in Belfast. I'm an example of that there. So we're actually hitting the 10% limit almost on that there. So we're an example of one that will raise it slightly, maybe to 15%. So that's why, from the Federation's perspective, we're in favour of.
Well, just on reflection then, you'll just want to clarify your position.
I better get back on my bike, because at the end of the day, I lost out on that particular situation at the argument. So I was putting my own point of view, not the Irish League.
So do you want to put
the Irish League are committed
the Irish League are committed to increasing that.
Yes, we are committed to supporting, to removing the 10%. We'd be much more concerned, though, with the idea of replacing the common bond with some sort of statement of common purpose. And that fundamentally changes why we exist.
And just to get it clear, I'm not hearing it quite clear on the 10% issue. What's your position?
The Irish League's position is we remove the 10% limit.
Right. Okay.
Categorically.
Okay.
I think what you were required to advise in terms of the consultation was whether you would support the enabling legislation, which will, you may retain the 10%. You could revisit your argument and win it, but you could also amend it if you wish.
Yeah, exactly.
Okay.
So just to be clear on that, and I have one more, Alec. I just want, in terms of the collective experience, again, to examine whether that 10% limit, as it has applied up to the present, has had a limiting effect or an inhibiting effect on recruitment.
It would be, in our experience, in a number of credit unions, particularly ones which are familiar in the Belfast area generally. For example, where we'd have grown up what might be known as inner city areas, and families have then moved beyond the beaches or into the suburbs. It's created particular difficulties for those credit unions, and I'm sure the same is reflected. There's another city up the North Coast area with a similar sort of experience.
That's people who used to live in Derry and now live in London, Derry. Okay, thank you.
It is a question that's raised sometimes with some members, particularly in the Fermanagh credit unions that I work in. Members do ask, well, if I move to Belfast in 3 years, does that mean I'm not a member anymore? So it is always a constant question.
Right. Okay, thanks for that. And maybe just in terms of members, we're going with concise questions, and maybe if you could congeal it all down a wee bit, because we have a lot of stuff to get covered here. We don't require 4 answers on every single one, though you might be tempted to do so. So I appreciate that. We have a lot of stuff to get covered here today on our agenda. Fergal, you want to come in briefly here?
Thing off the back of what Mitch McLaughlin was raised. If you remove the 10%, consistent with the original thought process around 10%, should there be another cap?
We don't believe that we actually need a cap on that at all, for the reasons that we've already outlined. And again, the credit unions can, within their own rules, decide to adopt a particular cap if they feel it's necessary. From our perspective, we don't see the need for a cap.
Okay.
If I might.
Yep, sure.
What we envisage is a situation whereby a person becomes a member within the common bond to begin with. It's only because of migration subsequently outside the common bond.
Yes.
It's not as if someone can join who doesn't belong to the common bond in the first place.
Yes.
As part of a non-existent, the 10%. It's to accommodate people who are already members moving, and it's simply for that purpose.
Okay, thank you for that. Mr. Flanagan. Phil.
Thanks, Patsy, and thanks for the evidence you're giving us. I want to deal with the whole issue of people that are referred to as corporate members. In responses to the consultation, both groups supported the proposal to allow corporate members. I think that's one of the things the committee was particularly keen to see progressed through this process. So I'm glad to see that there's widespread agreement there. But both respondents, or both groups, supported the proposal to restrict the level of corporate members to 10%. In terms of procedurally how that's done, would it be your view that it's better doing that in the substantive piece of the legislation, or would you rather see a subordinate piece of legislation deal with that could be amended in future in a much easier way?
This is a question I hadn't quite foreseen. We'd be more concerned, really, if it exceeded to 10%, the disproportionate influence that the corporate membership might have. By and large, the credit union exists to service the needs of individuals within their community.
Aye, but I'm not talking about the actual 10%. You know, you have agreed at this stage that you're happy with the 10% corporate membership and 25% limit lending. I'm talking about procedurally through the legislation, whether you have considered whether it would be better to do that through the primary legislation, or whether subordinate or secondary legislation should be introduced, which then, if necessary, could be amended at a later stage much easier.
From a personal point of view, I would see the second situation being the best, is that it could be done in ordinary legislation and change it at a later date. Because bearing in mind that the corporate membership is going to be a situation whereby if Derry City Football Club was a member of Derry Credit Union, there's still only going to be 2 people within that organisation that are going to have a vote at the AGM. I mean, you're not going to have all the people that are in Derry City Football Club having a vote, plus the fact that the credit union are going to have to hold a mandate as to who actually speaks on behalf of that particular organisation. It would have to be changed like a bank mandate. And at the end of the day, if it needed to be up to a later date, and could be done on subordinate legislation, it would seem to me, but again, I'm not a legislator, it would seem to me that that would be the easiest and best route to take. Obviously, you guys will know much more than that, whether we're right or whether we're wrong.
From our perspective, this is a relatively new facility for us. It has been working reasonably well on the mainland, but we are not sure how this will develop for us. So from our perspective, it might be better if there's flexibility built into it and how we actually handle it. I have to say, we've been experiencing a demand for this type of account, and we've had no later than yesterday small businesses asking when the legislation will change to permit them, for example, to become members. Now, the credit unions will obviously want to be very, very careful how they handle corporate membership in terms of the lending, and particularly putting members' money at risk. So from that perspective, I think we would prefer to have this as being as flexible as possible.
Fine.
If I might, the difficulty doesn't really. Our difficulty arises in how the PRA or the regulators want us to do this. It's essential that the names of these accounts are held in the name of the entity in which they represent, rather than the name of the individual. And that's a juxtaposition with what they're currently expecting.
And that was something that you reflected in your response previously. Is that something that you would agree with?
It is, because we're dealing. I mentioned the Financial Services Compensation Scheme earlier, and this thing called the Single Customer View file. And the FSCS have a particular way that they want, for example, credit unions in Northern Ireland to list what they refer to as joint accounts, euphemistically referred to as joint accounts, because as they explained to us, a joint account doesn't necessarily mean 2 people. It could be a number of people holding a joint account. and I can't get my head around that either. But when they introduced that, they indicated to us that that was by way of a sop to the credit unions in Northern Ireland, in the sense that because we couldn't have corporate membership, they perhaps saw this as an alternative or another way of dealing with it. But coming back to the central question, the difficulty is how the FSCS require credit unions to record whose account it is. So, for example, they want, in the field where it says first name, they want us to put the entity's name. In the field that says surname, they want us to put an individual's name. Now, there's a bit of a difficulty around that from our perspective, but that's the way they want that done. So our concerns are around how this would work out in terms of how do we deal with corporate membership, particularly around the situation where directors often change of companies or officers change of individual groups. So we're not quite sure how the FSCS will deal with this issue, and I'm not sure if that's going to present a difficulty for the legislation in Northern Ireland.
Brian, in a sentence, do you want to explain, so you have it on the record, why you have a concern about the names of corporate accounts being in the names of individuals as opposed to the organisation?
It's pretty much as David has reflected. If it was a local sports club of any kind, football or other, that club is likely to nominate a different person on an annual basis to represent the club. The account is written principally in the name of the club. It's primarily for that reason, rather than the name of the individual.
And have in the department's response to your response to the consultation, are you satisfied with what they have said on it?
Not really, in a nutshell.
The response they gave is that they should be raised with the regulatory authority. Is this something you'd rather see dealt with through the legislation?
If at all possible.
Okay. In terms of the limits of 10% and 25% of lending, can you envisage a situation where you were an individual credit union was very close to its 25% of lending to corporate members, and then a large debt was repaid to the credit union, reducing the overall debts or the overall credit it held, thereby increasing the percentage that the corporate members held that put it over 25%. What would happen, and I know nobody likes getting into hypotheticals, what would happen in a situation like that?
Or could you just...
Nothing. Nothing would happen, because at the end of the day, you can't legislate. I mean, it's at 25% at one given time. But you can't then go back and say to these people, well, hang on a second, you're now over your 25%, you have to repay the money. I think at the end of the day that would work itself out again by the way that other people would be coming in and taking out the money, so it would be good, and you would see it on a fluctuation basis. I mean, but if there's... But it wouldn't be in a situation that could be... the credit union couldn't lend out to allow it to go over 25%. Yeah. But if again you're saying if we had a large amount of money repaid, then it would obviously drop down because the overall amount of money lent out would drop. Yeah. The chances of that happening are virtually nil. But at the end of the day, you could not go to that club or that institution and say you have to now reduce the amount of lending you actually have. It might well be that if they came back to look for a loan, you could say, sorry, I can't give you any money.
It would be imprudent to begin with for a credit union to allow itself to be in the situation to reach 25% lending to a corporate member. Credit unions exist primarily to service the needs of its community, and it's about the spread of risk, in so much as if there was lending to the extent of 25% to corporate members, you've concentrated the risk. I would much rather see the money being spread amongst the broader community than into one, albeit an entity with a significant number of members. I think a greater good is served through the model which we currently operate, but we would like to have the facility to be able to lend to corporate members. But I don't envisage... Well, I'm aware of other jurisdictions that are involved where that has happened. It is great difficulty.
You want to David?
No, simply to underpin what Yuil has said as far as that's concerned. If the loan was given within the regulations at that point, at a particular point in time, The fact that circumstances change later on doesn't change that position, I don't think. And therefore the credit union would simply have to live with that until it had brought back more money into the system to actually bring the 25% figure down. I think it's one of those things, but as Brian has also said, the credit union will obviously take a very prudent approach to lending to corporate members as opposed to its ordinary members, because again, it's putting, I think, more risk in terms of the members' money, and credit unions, being very prudent organisations, won't do that.
So, is it your understanding that the legislation will refer to credit unions being unable to lend greater than 25% as opposed to 25% of its lendings will be to corporate members? Or would you prefer legislation worded in such a way?
I would, personally speaking, would prefer if the 25% referred to the overall lending of the credit union and the relationship with the corporate members to that.
But you don't think it's a situation that's likely to happen, Brett?
I don't foresee in my lifetime where 25% of the lending would be required. The credit unions would feel that 25% of their lending would go to.
Okay.
I don't see that demand existing in the first place. Well, we haven't experienced to date. We do absolutely want to make a provision for corporate membership, and we'll watch to see how that might grow and perform.
In terms of community, voluntary or sporting organisations, if the number of corporate members is limited to 10% of the credit union's membership, does this mean that such groups would be unable to form their own credit union with a view to attracting membership from its member groups?
Sorry, can you repeat the question again?
I'm not sure about that.
If the limits of corporate members will be limited to 10% for individual credit unions. If that's the case, will there be an impact on individual sporting organisations or community organisations that may wish to establish their own internal credit union?
Can't do that without fulfilling all the regulations. You need to first of all have all your directors have to be approved by the regulator. There's a whole process to go through before you can form a credit union, and you can't operate a credit union informally. That's just not possible to do.
And there will be incoming regulations from Europe in relation to minimum capital requirement in order to set up a new financial institution of any sort.
I would say to you, Philip, in the legislation that's coming down the line from Europe, I would see that the chances of another credit union being set up in Northern Ireland being very, very slim.
Okay.
In that particular situation, and bearing in mind, if you're talking in terms of 10%, unless they wanted to set up, I don't even think they could do that, unless they wanted to set up as an industrial property credit union in their own right, then they would have to go through the hoops to set it up themselves. It would have nothing to do with the existing credit union that would actually do it. But I mean, don't forget this 10%. You're talking about a credit union that, say for a credit union who's got 10,000 members in it. You'd have a lot of corporate entities within your credit union to be at the 10%. I mean, I don't ever see it's been in that 10% situation, by the way. Likewise, I don't ever see us to be in the 25% that you talk about, because the credit unions themselves will rein the horse in at that particular stage, and when they're looking at the actual lending situation, they'll say, hang on a second, we have too many eggs in our one basket here. It's just like when we're doing the investments. We don't invest all our money in the one bank. And therefore, I don't see us ever coming to a situation where we'd be anywhere near that 25%. Although I answered the question on the basis you asked the question.
Unless, of course, government underwrites the lending.
Yeah.
Well, they're looking for the 4.5
they wouldn't do
million.
that with the bank. Okay, right, thanks, Phil. Mrs. Overend, Sandra.
There's no harm in asking.
Sorry, chancing my arm.
Thank you very much, Chair. I just wanted to touch briefly on the proposal to allow credit unions to offer interest-bearing shares as well as the dividend-bearing shares, and just really, is there both in agreement with that proposal?
Yes.
I understand, and I just wanted to just double-check that you're content with the proposals, and if there's anything else you want to add in to that.
I don't think so. I don't think there's anything we can add to that.
I think the rationale behind that, if I can call you Sandra, the rationale behind that was a situation at the present time the credit unions are in such a situation whereby the shares of any particular person is withdrawable within 60 days. And therefore, if you had these shared, you would actually know in advance if the person was putting in, we're going to put them in for 5 years, we're going to put them in for so much, guaranteeing the interest rate, then the credit union could actually, even better than it can now, forecast as to how much money it's got to lend out. Hence the reason why we're quite happy to run with that particular situation. And it was something that we wanted, by the way, in our legislation as well. We wanted that in.
Okay, that's great. Thank you. Thank you.
Thanks, Sandra. Mr. Agnew, Stephen.
Thank you, Chair. And I suppose at this point you should have done it earlier, declare an interest as a member of Bangor Credit Union. Particularly given what I'm going to ask, it affects me to some extent as having an outstanding loan. The attachment of shares issue, there, am I right in saying there has been some different opinion between the two bodies, and could you kind of clarify where you are at now with that issue?
Sorry, if I could take this question first, Brian.
Okay.
From our perspective, we don't disagree with the Irish League position on this, to be perfectly honest. When someone borrows from the credit union, their shares are obviously attached to that loan. And we see the situation where if that person has another account and is saving, for example, we can't understand why then those shares can't be also attached to the loan, because if someone owes money to the credit union, borrows from the credit union, then we think the credit union is entitled to have a lien on all their savings. That's our position, and I think that's the Irish League position.
I think that's self-explanatory, and we're of one voice.
Okay. Do you agree with the department's position that this will clarify things for members? And I come at this just from my own experience. When I took out my loan, it was made clear that the attachment of shares. If you have this situation whereby it's make sure I'm getting the department's position correct. I don't. So you're making it clear when the loan's taken out, but I'm just not sure. I suppose I'll just repeat the question. Do you agree that it will give more certainty to members?
Well, can I answer the question a different way, by the way? Most credit unions are now in a position whereby they're actually allowing people to set up a special account called a special savings account, called Easy Shares. And that came about as a result of conversations with the Consumer Council at the time of the Fair Pack went bust when they were actually saving for the people's Christmas. And we tried to encourage people through this, through the setting up of Easy Shares, to actually set up accounts that they would actually save for specifically, i.e. for Christmas and for things like that to use in that situation. And those are not, I emphasise the point, those are not used against a person's loan, so they can come in and take those out as and when they want, and they're encouraged in that aspect to do it. But if they're not using that particular situation, and I want you to understand, Stephen, surely you would accept the fact that if a person owes you £5,000 and there's £10,000 in their savings and they won't pay the £5,000, and the £5,000 is continually gathering interest all the time, surely we have a right to say to them, listen, hang on a second, you owe us £5,000 here and you're not paying it, and we're paying you interest in £10,000. Yeah. All we're saying is that the excess of those shares are in a situation, and that's what we want.
Okay. No, I certainly accept the principle, and as a member, I accept it and indeed support it. Chair, if I could just ask a very different question, I suppose, but it comes back to the issue of membership and about, Chris mentioned the probably surprising number of young people, and it's maybe not the perception. Just looking at the perception I have now, what about female membership and female officers? I'm just conscious I'm looking at four men. Is it been traditionally a male dominated industry, for want of a better word?
I could put a lie to that, because in our board meeting last night it was all females and 2 males. Okay. Our board of directors is constituted that way. That's just the way it's made up. So I would say there is a range across all the credit unions, but I know from personal experience, in my credit union, as I say, the directors are all female apart from 2 males.
I suppose the best answer to that is that we're as males and we're not working. and we've no jobs, and the females all have jobs to go to, and that's why we're here and they're not here. So, but at the end of the day, I think that the movement has worked very hard, by the way, over a particular period of time to actually make sure that we had gender balance. And to some extent, we haven't got there fully, but we recognise that there was, bearing in mind, of course, it was a woman who actually set up the movement in the first place. And to actually membership, there would be more women members of credit unions than there would be men. The difficulty, of course, again, is that women, because of their roles and because it's at night time, is a difficulty getting into actually have board meetings and things like that, whenever it's time to do with children and things like that. But in this particular instance, the only reason we're here as a city is we're the non-workers and they're the workers.
The only difficulty we have is keeping them quiet. Sorry.
Oh!
Sorry, Sandra.
That wasn't directly on me.
No. It was directed at my board of directors.
Right.
I have to tell you, it's on Hanser.
Thank you, Chair.
Mr. Freeman.
Thank you, Chair. Can I quiz you on the interest rate per month, the 1%, 3% argument?
Yes.
It seems, reading the responses, that there was a difference of opinion at a time, and you've come to a compromise or an agreement. I see the credit unions have been a useful body that can go some way to combating the scourge of inappropriate lending out there at the present time. And I thought that there was an opportunity there, especially with the transfer of the regulations to the FCA and the PRA, that give the credit unions more flexibility. Moving forward with regards to services that they can provide. Is this not then restricting you to what you can do? You do an awful lot of good out there, and people turn to you for inexpensive loans. But to have that flexibility in the legislation, whether you use it or not, surely was a wise thing to have. And whether then collectively, as federations and groups, you could agree to say no, not at the minute, or leave it to the individual credit union branches.
The difficulty in that is that you're asking people in that instance, bearing in mind that the credit union has traditionally represented and give loans to people in society who are more vulnerable. And it is illogic, in my opinion. There is no economic argument to sustain the argument forward to say that people who can ill afford to repay the loans
at 1%.
At 1%, that you can actually pay it at 3%, and to create an income stream from those who are not able to pay is somewhat, and I hope I'm not entering too much area in the question of politics, is like trying to say to a rich man, you can keep your money, but we'll take it off the poor. At the end of the day, there is no economic sense. There is possibly some argument, and I mean, it wasn't a unanimous view of the Irish League of Credit Unions that we would go down that road, but it was a vast majority of people not to go down that road. And the reason that we don't even want it in there as an enabling situation, because bearing in mind, if one credit union implemented, it is a block whereby it will be seen as being something that maybe we should all do. And it is not in the interest of the credit union movement to do that. Bearing in mind we would be in this situation whereby payday lenders, if you take the 3%, you're talking in terms of an APR of somewhere in around about 39%. Banks aren't even charging that. So I mean, it would be illogic for a situation of credit unions who are saying, we are here to help you along particular lines, to give you the dignity of actually having money in your pocket to go out, that you're not going to these gombeen men and you're not going to the money lenders to get this money. We will lend it to you. And at the end of the day, society is about helping people. And bearing in mind that the ethos of the credit union movement is you help me, I help you, and we'll both help each other. That's the very aspect of what the credit union movement is all about. And it is fundamental importance that we shouldn't go down the road of actually saying to people, because you're poor, we want to take more money off you, even though you haven't got it. And I would urge you not to go along with that 3%.
If hypothetical, but if you were to increase by 3% or 2% or 1 point something, well, let's talk about a 0.5% rise to 1.5, say, hypothetically. Has there been any figures or business plans done to say, to actually detail how much that would actually bring in? And then, depending on that amount, what other services you could provide?
There's two things. If we were to go to the 3% model and a credit union were to adopt that, that introduces then the whole concept of people being treated differently within the credit union, because some people would have been able to, and their credit history would allow them to pay 1%, and others would be sufficiently impaired in that referencing agency to have to pay 3%. All of our members are treated equally and pay the same. So there's a fundamental breach there at that point, and that's part that we can't get over.
I'm keen to hear from...
Yeah.
From our perspective, we've canvassed our members, our member credit unions around this. Now, their view was that whilst the committee may, or the department may...
They got a mobile on.
Must be yours.
I thought I turned it off.
Just mobiles should be switched off.
Yeah, mine's is off, it's not mine.
It interferes with the...
I thought it was turned off. The power button was still on.
Sorry, Chair. As I was saying, we canvassed our member credit unions. Their view was very much that if the department proposes this facility, they won't object to it. The department can put it in, but 100%, I would have to say, member credit unions said they will not use it. As Brian has testified, it takes us away from, first of all, the original ethos of credit unions. If we start charging beyond 1%, we're not helping the most vulnerable people in our society. And then it does introduce different rates that you charge people, as Brian has said, and then there's going to be conflict around that, and there's going to be disagreement around that, and people are going to start saying, making derogatory comments about the credit union and its operating policies. So we don't want to get ourselves into that situation. So whilst the department may propose 3%, and we have no objection to it doing that, we certainly won't be using it.
And I think the point there in clarity from it, as the movement as a whole, the advantage of having a 1% cap is it means across Northern Ireland you know exactly what you're getting when you go into a credit union. There's not varying rates, and that is the fear that, you know, if a few credit unions broke ranks, there'd be varying rates depending on where you're living. But we understand your point about flexibility, you know, that if 3, 4, 5 years down the line, you know, there was a need to up it to 1.5 or 2%, or we did develop a new product that could help with payday loans. You know, we're of the understanding from discussing this with the department that it could be brought forward quite quickly through subordinate legislation, which our estimation is around 3 to 6 months max for that there. So there is somewhat flexibility. There's no real need for it now. There's no real want for it now. But if we were in a situation where we did want it, it can be brought in quite quickly.
The onus is not on credit unions, of course, but there is this scourge with regard to expensive lending. Have you done any survey work or a piece of work that would identify how many of your customers, the most vulnerable, the most poor, actually, credit unions, of course, is a wide spectrum of customers, but within those customers, has there been any piece of work done to survey how many of them would avail of payday loans also, or will use the local Jimmy Hardknuckles?
Well, I think if you see this payday loans thing, it's something that I believe that people are looking at it in a totally different light altogether. Nobody in their right sense, by the way, who is a member of a credit union, would go to a payday lender to borrow money of a payday lender and pay the rates of pay and that they pay whenever you can get it in a credit union. And if I could bore you just for 1 minute, if you borrowed £1,000 in a credit union and you paid that back over a year as you were scheduled to pay it, it would cost you £44 to actually pay that. And I don't know whether anybody's watched the television yesterday morning or not, where somebody who had borrowed £500 from a payday lender now owes £3,500. And those are the type of rates that you're talking about. And at the end of the day, I come back to the point I make. If I was saying to somebody who borrows £1,000, as opposed to paying £44, you have to now pay £132 for that money for a year. That is the type of money that extra money, the nearly the £100 odd, could actually tip that person into the balance and not be able to repay the money. So it could be even short-sightedness on behalf of the credit union, that they could, in the short term, get a few interest, but they lose the loan in the first place. And at the end of the day, there's no economic sense for it. Now, unless you're going to sit down and do a specific product, and at the end of the day, we don't see a specific product at this point in time for credit unions to actually do that would need the 3%. And we also believe strongly in this instance, at least I do more than anybody else, I believe passionately in this. If you go away from the ethos of the credit union movement as it was first set up to do, and that was to deliver a service to people, those in the most vulnerable in our society, to be able to have the dignity to go out and spend money with cash, as opposed to going into the people. It used to be they'd went to clubs or what do you call up things with a, escapes me now, where they looked at the books and sent off to England for the catalogues. They'd done that through catalogues, and the money was all going out of Northern Ireland. And if you take, I mean, we done on this as an example last year, the credit union movement, and I'm just talking about Derry now. Derry last year lent out in excess of £10 million just for Christmas. That was ploughed back into the local economy. And at the end of the day, it is against those figures that there is particular areas, and I would say to you where mostly where these moneylenders are actually getting benefit is that they're actually, the facility that they might offer to you is they go to the house. And you've got the moneylenders who go to the house and they bring their hired men with them. And if you don't pay, they'll take it out of your nose. I mean, I don't know why you saw the incident that happened in Limerick not very long ago, where they were standing outside the credit union, where the women were coming and being handed their family allowance books, and they went in and lifted it and they came out and handed it out to somebody else. We don't want to see that situation at all, gentlemen.
If I just might add, as well as not understanding the premise, if 3% were seen to be the methodology by which you address payday lending, why are we not charging 3%? There is no business case. There's no established research to show that 3% will address the issue of high interest rates or payday lending or anything else. So it's a figure that's been picked, again, cut and pasted from UK and dropped in. And it's a bit of a fishing exercise, really.
Can I say two things, Chair?
Very briefly, because we've covered a lot in this session, please.
I will be brief. The first one is in respect of a meeting that both organisations held last week with certain officials from a particular department, which I won't name, and the issue of payday lending came up. And I personally, I don't know how Brian felt, but I was astonished to hear the person chairing that meeting saying that the government didn't see that payday lending was an issue, was a problem. They asked us, could we define what the problem was? And I was astonished to hear that from a government official, from a departmental official. The second thing I want to say is that in terms of payday lending, both the Irish League and the Ulster Federation have entered into a project in Cookstown with the credit unions in Cookstown Borough Council, which you will be aware of, to try and deal with some of the issues around payday lending. And we're operating with St Vincent de Paul and the women's group there to try and underwrite loans. And again, sorry, Sandra, I wasn't really being flippant when I was talking about government underwriting some of these costs, because there is a role to be played there. For a pot of money to be set aside to underwrite a process by which credit unions can lend money in those circumstances. Sorry, Chair.
Just one point, and could it be the case that some of those people who are turning as a last resort to the money lenders or the payday lenders are in fact people who may have, as they talk about in our country, tied a dog with yourselves and others, i.e. owes you a lot of money, high risk people?
There's a pony tied in the fence?
Correct.
Could well be, all right. That could well be.
That's inevitably a situation, because I'm aware that debt and getting in loans from people can be a bit of a tricky problem too. So they're hardly going to come back to you and ask for additional monies if in fact they're not making even a stab at paying off what they owe.
At the end of the day, Patsy, the situation is if those people come back to us, we would be the first people that would help them. And I have quoted this on many occasions where I've been talking about credit unions.
Yes.
Credit unions are like a situation whereby you know what the footsteps in the sand are, where credit unions have helped people to get through to the other side. And if those people would only come back and talk to us, we will help them through any particular situation they have to get them through the other
Oh, I
side.
appreciate that, but there's the old Arab
One of the
saying,
things I was
you
going
know,
to say,
so,
one of the throwaway remarks I was going to make to Paul was, he could actually help us in as much as if he encouraged the government to not to be charging the amounts of corporation tax that we're charged, and that would give us an income stream that would allow us to do other things in the credit union without trying to charge members the money.
yeah, appreciate that. You do take my point.
Oh, I do, yeah.
That's based on knowledge as opposed to an opinion.
Yeah, I accept
you can only be stung so many times, you know.
Yeah.
And
I think that's why we were interested in the pilot in Cookstown, to see
Yes.
how that operated, to see whether it was successful or not, in the sense that the credit union's money wasn't at risk per se. It was being underwritten by the two organisations.
Appreciate that.
And in those conditions, we thought there was a way of progressing that type of lending.
Would you accept, Patsy, that 3% would be no good in the instance that you're talking about?
Well, not at all. You're not going to lend to people. It doesn't matter whether it's 1% or 3%. You're never going to get it back again.
Well, it was a donkey tied to post.
Aye, that's right. Now, just very, very brief point, and this relates to the copy of the rules, the increase in charges to the copy of the rules, and I'm sure this isn't a thing that, but I have to ask it, it isn't a thing that's going to come up every day in every credit union. The issue of the charge for the copy of the rules for non-members, and as again, you're the experienced people with this, I am sure it doesn't come up very frequently with you as an issue. But then secondly, the issue of no charge for stuff that's transmitted over either the web stuff, or the criteria have been displayed on the web or indeed transmitted to people by email, those people who are members. Can you just give me a very, very brief view on that to tidy it up for our own homekeeping here?
Okay. Do you want to?
You want to go or do I go?
I mean, from our perspective, the legislation doesn't prescribe, you know, how you have to deliver. It doesn't have to be printed copy, right? Where we can, we do frequently sort of update our rule book, and we can distribute that through either our websites or via email.
Yes.
It's not really an issue for us at this stage.
Thinking that.
Patsy, at this particular point in time, most credit unions have got a website.
Yeah.
And all this information on the website is up there.
Right.
And the actual rule book would be up on the website, and the rules are up on the website as to what they are. And if people wanted them, they can download them for free.
It's very rare that we'd be asked for the printed copy because it's...
That's what I wanted to hear, because we have to ask it just to sort of
Yeah, but I mean, close
close
most of them are
that
up.
end off, but it's not a major issue anyway.
Some of the smaller credit unions might not have a website.
But in the instance
But their standard rules are actually
in the instance where people do ask for a hard copy, there has to be a cost incurred.
Right.
We would suggest also that there's some inbuilt mechanism to allow for inflation over time.
Yes.
But
Oh, no.
ideally, people would get it from the...
Particularly non-members, it's going to be rare that you would get that, I presume, you know. Okay, well, thanks very much again for your time today. That's been very valuable to us, and again, thank you for the time that you give HUN and indeed the credit union movements to the community. Incredibly valuable work, and I think maybe at times it's underappreciated by a lot of people. So thank you again for being with us today.
Thank you. Thank you for the committee's time.
Thank you, Jim. Thank you. Okay, and just in regard to members, if we're content to agree a provisional committee view on each of the proposals at the committee meeting on the 27th this month. Agreed then? Thank you. Next we move to agenda item number 5. This is an oral briefing from Lightsource on the Northern Ireland Renewables Obligation. And papers for this item are at page 80, and they corresponds from Lightsource, that's beginning at page 81. And we have tabled today the cover note, which includes the purpose of the rule, the SL1, the departmental response to committee queries, the ministerial response to committee queries, and before us today are Mr. Nick Boyle, the CEO of Lightsource, Mr. Conor McGuigan, the Business Development Director of Lightsource, and Mr. Richard Green, the Senior Business Development Manager of Lightsource. You're very welcome to be with us here today. Appreciate you taking the time. The reason we are here today is because previously we had a session with the department, and it's probably not to overemphasise that it was short on detail. And so it's your opportunity today to be with us and to explain your perspective on it so that members are better informed in coming to the decision around this. Now, the format is, don't know how you ran at the start there, it's you've up to 10 minutes to make your case, and then we have a Q&A session from members, and as we try to elicit more details around it. So, again, thanks for being with us, and please do continue.
Thank you, Mr. Chairman, and committee members. Basically, and thanks for inviting us to take the opportunity to explain a little bit more detail, hopefully in the time that we've got, what we believe is an exciting and big contributor, potential contributor to the renewable mix in Northern Ireland. I'll try and keep this hopefully not to the 10 minutes because I'm interested in the Q&As, but I just want to sort of start by maybe giving a little bit of background on what we see as the advantages to remind everyone of the obvious advantages to renewables, and indeed more specifically solar in Northern Ireland and indeed everywhere else across the world. First of all, what we're talking about is local power generation. So we're sort of, if you like, severing this requirement to rely on fossil fuels from either the Middle East or Russia for gas, etc. So it's true homegrown electricity generation, and it's free source. Clearly, you know, the sun comes up, the sun goes down every day here. Maybe not as sunny as we'd like it to be, but it still comes up sufficiently. And obviously that also has to be taken in context with the backdrop of the likes of Kilroot and Ballylumpford and their reduction of in 2015 of 500 megawatts of their generation. In the same way as we're seeing in our main markets of Great Britain, where 24% of their electricity generating capacity is being reduced over the next next 8 years. Exactly the same applies to Northern Ireland. So that's why, if you like, that's sort of, if you like, an important backdrop. Also, I think we need to be mindful of the fact that what we're creating here is a very significant income into the rural economy, just from, you know, diversification for the farmers into another area. This is just another crop, if you like. And obviously there's revenues that we will pay to them, and revenues that are set for 25 years rather than dependent on weather, which, if you've sort of been involved in any of the floods, or any of your constituents have been involved in any of the floods lately, obviously having a guaranteed revenue coming from ourselves is obviously a big plus. Also, there's other taxes, rates, etc., which we will be paying, which obviously doesn't obviously happen. The fact that they can continue to graze on the land, and it doesn't affect their single farm payment. So, you know, there's two revenues into the rural economy, whereas currently they're obviously sitting on one, and one that's in some cases under question. Local jobs, we estimate at the minute we've probably got, I think, 3,000 or 4,000 individuals working on our sites, constructing our sites in Great Britain. We estimate that with our plans, just this one company's plans for Northern Ireland, over 500 jobs will be created year on year in terms of the installation, and then there's ongoing jobs in terms of the maintenance for the full 25 years. So again, that's something that, while not immediately identifiable, I think is relevant given the current situation in Northern Ireland from a job perspective. Obviously, something that's close to all of our hearts is the requirement or the wish to deliver 40% of electricity by renewable means by 2020, and this obviously contributes to that. While wind is something that seems to be in all of our psyches, it can't just be wind. It needs to be part of an overall mixed renewable portfolio. In terms of just for us as a business, we are over 35% of the entire UK market, this single company, so we're the largest by country mile, 60% Northern Ireland owned, which is quite useful as well. But the one thing you've got to appreciate is the majority of our sites are in England, where we've got a significant number of sites in Wales, and we're now moving into Scotland for the first time. So this is not, our issue with this legislation has got nothing to do with Northern Ireland from a sun perspective, because Scotland is every bit as good or as bad, depending on where you look at it, as Northern Ireland is. The issue is simply the special circumstances, unfortunately negative circumstances, that conspire against us in Northern Ireland, and they are what we believe things that are definitely manageable, but we basically need the support of this change in law in order to sort of kickstart this industry. And they fall into two distinct areas, I suppose. It's planning, but not so much planning per se, because we had
about 12 to 18 months ago. Very, very productive meeting with Alex Atwood whenever he was the Minister for the Environment, and he put his shoulder behind the whole process, and we've seen in recent months BNRG getting the first application through. So we don't believe that planning per se is an issue in itself. The main issue is the grid, and whether we care to admit it or not, the grid in Northern Ireland is extremely old. It's I won't say antiquated, but it's certainly in serious and significant need for an upgrade, and therefore that needs to be borne in mind. So it's the grid, and more importantly, I think the processes and how planning and grid interact. And I'll give you just in the few minutes that I've got left, a couple of examples. The first one is that Northern Ireland insists that planning and grid need to happen in series rather than in parallel. That's not the case in GB. In GB, there's a 13-week process for planning and a 13-week process for grid, and they happen at the same time. Here, because of the fact that we have no understanding of solar, we're educated renewables equals wind, and with wind, when you put 10 applications into planning, if only one comes out, what the grid people don't want to do is to waste all of that time doing a grid application when they know 90% of it's going to be aborted anyway. And that is true of wind, but that is not the circumstance with solar. If you put 10 applications into planning and solar, 9 will come out, not 1 will come out. And therefore all of those issues with aborting costs or aborting efforts are no longer relevant. So I think that you've got to have planning before we look at it in the grid is something that, while we understand why it's there, is not relevant for solar, and we can obviously give supporting evidence to that. That's not the way they work in GB. The two things happen at exactly the same time. Our normal from hello, how are you, Mr. Farmer, to operation and generating revenue in GB is 9 months. It's rather more challenging here, especially whenever you do things. I mean, the planning alone takes 6 months, and that's before they even start looking at the grid. So we've given timings in our report. Other issues are the fact that you have the concept of contestable works. In mainland GB, we can get third parties that have been signed off. In fact, Lagan Construction is one of these companies in GB that signed off as being able to do work on behalf of the grid. NIE does not allow you to do that. They have to do the work. Now, that has two issues. One, price. There's no competitiveness there. And two, speed, because they've only got a finite number of individuals doing the work. Also, in Northern Ireland, you have no ICPs, independent connection providers. So nobody else can do the connection. It's NIE or nobody. So again, this monopoly situation, unfortunately, again conspires against us. And probably the biggest one from a pure infrastructure perspective is that NIE do not allow you currently to tee off an existing line. So you could have this perfect field, perfect for solar. There could be literally a wire running over the top right-hand corner of it. In the UK, we just tee off that, splice, hey, we're grid connected, happy days. And in Northern Ireland, they won't do that. They'll insist that you go all the way back to the substation, which in itself might not be an issue, but it tends to be 3 or 4 miles away, and therefore you need planning permission from every single bit of land and every landowner in terms of way leaves between here and 3.5 miles away. So despite the fact that you can do it, and we do it, because of their rules saying they don't want to do it, then all of those extra bits of work then applies. And again, it's effort that doesn't need to exist, but does exist. So that's why we're saying that process as well as infrastructure is relevant. From our perspective, we would love to do an awful lot of work in Northern Ireland, not just large-scale roads. We want to do ground mount as well. And what we're basically saying to the committee is that the challenges that are being put in front of us today are simply meaning not that the revenues that you're proposing to pay us are not correct, but the timescales are not correct and not equal to what is going on in the rest of GB. Therefore, we need more time in order to deliver the same, which is why we're asking you to defer the drop in the feed-in tariff or the renewable obligation certificate to allow for that extra time for us to do those extra works. So we're not asking for more, we're just asking you to identify the fact or be aware of the fact that the timescales means you're elongating our processes, which means you are not being competitive with the rest of the UK, and therefore we need to, if you like, almost slow down that degradation in the feed-in tariff or the renewable obligation certificate in order to allow or to be, cognizant of that fact. In terms of other elements, from our perspective, we would love to do stuff in Northern Ireland. My wife would be very happy because I'd be able to fly home on a Thursday rather than maybe she wouldn't be happy, but I'd be able to fly home on a Thursday rather than a Friday. As I say, all that's standing in our way of making this an initial £100 million investment is process rather than necessarily our appetite as a company.
Okay, thanks very much indeed for that. And obviously some of the issues that you've raised there with us are crucially important, because it's not just the solar that we're having the problems with. It's other grid connections and indeed grid expansion, and not just for renewables, I have to argue, particularly west of the Ban. Although I think maybe a lot of your work's east of the Ban.
Well, we were told by NIE to focus east of the Ban because of the fact that there's such problems west of the Ban. So we can do either, but the advantage with solar is as long as it's pointing up, you know, we don't need an exposed cliff like you do with wind. It's anywhere will do. I'll pick up on those points. Maybe you could just expand on us here. I've read your presentation and met your colleague here as well. The total investment, if you could expand for us just a bit more detail. Anticipated total investment of 120 million, generating 45 million of revenue for Northern Ireland contractors and create 500 jobs. Now, I'm just sort of trying to square that in my head with, in practical reality, that 45 million that's anticipated to go to contractors. What is the scale of the schemes that you have projected that are going to deliver 45 million? Because that's quite a bit of work. It is quite a bit of work. I mean, to put in
500 jobs is quite a large number of jobs.
Well, to put into perspective,
are you going to do these all at the one time, or what? Because usually these projects are, I think, bit here, bit there, bit done there, and 500 people employed are quite a number of people.
And there's about, I think, 4,000 on site at the moment that would have said the same thing. We're a 3-year-old company. We started with 6 people. We now have 250 people. Those aren't the jobs. That's the core business. But we've deployed £1.1 billion in the last 3 years. We have about 4,400 acres currently covered in PV. On site at the moment, we have somewhere between 3,000 and 4,000 individuals installing our sites.
500 on one site.
500 on one site alone. So while it is a big number...
What size is that site, just by the way?
33 megawatts.
No, 178 acres. 178 acres. That's the biggest site. That's a bad example. Our standard site's 30, 40 acres. I mean, I've got some pictures if you want to maybe have a look, because if you haven't seen these things before, they're...
Oh, I've seen your photographs.
Well, we'll pass. I mean, but they're all. I mean, we're also on the roof of Bentley cars, etc.
I'm genuinely interested. I told your colleague in how this works, and
so let me answer the question. We're assuming 100 megawatts. In Northern Ireland over the next 18 months. 100 megawatts is crudely between 120 and 120 million pounds. To put them into perspective, we have done over 300 megawatts this year alone. So it's, you know, in the scheme of things, it's not enormous. It's something that is natural progression for our business. In terms of land, it's about 500 to 600 acres. So that might sound a lot, but for a business that's done the amount that we've done over the last number of years,
that's your anticipated 500 to 600 acres
for 100 million pounds of investment. Yes.
Right.
And where we get the 500 jobs from is that's what we estimate using a standard build-out time. That's how much. How many individuals, if we had that full period of time, would be required to install this. Now, those individuals aren't employed for 25 years. They're installed to build the site. There's then a number of them installed for 25 years, but not the full 500.
Well, that's what I was coming to, because you make, you said yourself there'd be jobs in maintenance. I presume you're not, because of the level of the quality of the technology that you're using, you're not going to be thinking of a huge number of people employed in maintenance, or else you have a bit of a problem elsewhere.
Exactly. Typically, for every 12 megawatts, our rough rule of thumb is we need 1 maintenance staff.
Yes.
So we have an operation and maintenance office based in Bath with 30-odd individuals there. They monitor, well, there's 2 teams. There's an asset management team that monitor all the performance,
yes,
and then there's the reactive team that, if there's an issue, will go and change a panel, change an inverter. I'm not an engineer, so I'm saying these things we don't actually know what it involves, but certainly it's low-level effort. It's an electrical engineer or an electrician. It's not, you know, we're not building a nuclear power station here. It's
no.
The same technology as goes on your roofs. It's just there's an awful lot of them with ours.
Okay, thanks for that. I have Mr. Frew, Paul.
Yes, thank you, Chair. Again, I've certain sympathies. I'm very much a one-farm sceptic.
I say farm there.
And I would like to, no chance. And I would like to see a greater mix of renewable energy. I'm all for a target of 40%, but I would like to see a mix. And this is something I think could well help. In fact, I think it may well be along with offshore wind, it may be the biggest growth market. The issue, which you've already stated, is the delay in time for planning, service and grid connection. Do you think it is wise, therefore, to step down the ROCs over the next 3 years, given the fact that it will probably take 3 years or 2.5 years to actually go from feasibility studies to identifying land to actually getting permission to and grid connection to install?
Well, that's exactly the crux of our point. You say that in Northern Ireland it will take 3 years, and unfortunately you're right. In Great Britain, exactly that same process takes 9 months. And all that we're saying is we want you to identify the fact that what takes a very short period of time in the UK, and therefore, because the tariff drops on a particular date. If it takes an extra 3 years, then we're 3 years behind in tariff where we would have been had we did it in the UK. And that's exactly the point that we're making. From our perspective, we're not asking for more. We're asking you to slow down the drop in the renewable obligation certificates. If we were able to, if this was a level playing field, we would not be sitting here today. The fact that we're developing sites in Scotland means that, and we're not arguing with them about changing the ROC. The reason why we need to sit down and argue with you guys is because the backdrop and the grid is not the same. The processes are not the same. There's far, far more barriers which elongate the process. So I would say I absolutely agree with you. We're not looking for anything other than identification or if you like, an appreciation of the fact that things are not the same here.
What's the rationale for the GB ROC stepping down?
Well, it's interesting. The rationale was born out of the fact that they saw, basically, and I'll illustrate the point by saying in 2007 you would have bought a megawatt of panels from Germany for about 3.8 million euros. We were buying them at the back end of last year for 430,000 euros. And the reason for that is absolutely clear. I've got to watch what I say given that I'm on camera, but a Chinese individual got on a plane, flew to Germany, bought a solar panel, brought it back to China, took it apart and mass-produced the hell out of it. And therefore, not surprisingly, economies of scale meant that absolutely drove down the price. So the reason why you saw such a massive reduction in the cost is because the Chinese mass-produced this stuff. In identifying that fact, mainland GB looked at this and thought, well, we'll set a ROC price at 2 after doing loads of studies, which we were involved with, set the ROC at 2 ROCs, then it would reduce to 1.6, 1.4, 1.3, etc. And those drops were born out of the fact that they saw a progression in terms of the reduction, because of the increased production, a reduction in the price of the main components, most particularly being panels. Subsequent to that, however, which is why we should actually be going back to the GB and telling them to review it, there's been an EU anti-dumping provision against the Chinese, which now means the panels we were buying for 430,000 euros per megawatt, we're now having to pay £560,000 for. So actually you could argue, and it's fixed. So we're not in a position where that degradation in price actually should be relevant anymore. We should actually be sitting in front of DETI in the UK and basically saying, guys, we should, in fact, we have sat in front of DEC and said exactly that. So the reason why it drops is because the assumption was that increased production would drive down price, but in reality that's not the case.
Yeah, because there has, as you say, an EEC or EC minimum price for imported solar panels now. That's now in place.
It's now in place until December 2015.
It seems to be the case. I think we're sitting at 5 megawatts at the present time. The majority of that will be on domestic roofs. England is sitting at 3,000 megawatts at the minute.
I would say you're probably near to 3.5.
3.5 now.
Yeah.
So it has, the market has moved on there. People have committed. Whereas here, I think we've only one planning application successful at the present time.
Correct.
For large scale.
Yeah, BNRG.
Downpatrick.
Yeah. But we have 5 in.
We've 2 in planning, currently in planning, similar sort of size. The largest installation of solar PV in Northern Ireland at the moment is 50 kilowatt system.
Yeah.
To give you an idea, that's about the size of 2 tennis courts. The size of projects we're talking about are a minimum of around about 30-35 acres.
So is the trick here not to necessarily talk about next year or this year, but actually 3 years down the line? Now you may well have as a company a couple sitting in the fire at the present time. But surely if you have your feasibility studies, your business plans done, and you now find that you're on a cliff edge here, and if you don't get it done within a year, you lose the rock, or the percentage of the rock, which then could, well, it's going to affect your
well, it affects it. You know, we've got to run a financial model today, knowing what we know about the timescales, which is educated by the process, and decide whether or not this works. What we're saying here, sitting here saying is, guys, we'd like to spend £100 million, but the financial model simply doesn't work. If we were able to build it today, or even in the timescales that we're allowed to build it in England, we would press the button right now and be building it, same as we are in Scotland, England and Wales. But process says we've got to add on 24 months. Add on 24 months, and you've already reduced down to something that means our financial model doesn't work. So what we wouldn't want to say is do nothing, and in 3 years' time then have a tariff that works. What we're saying is sort of back up the tariff a bit, which is what has been suggested, so that we actually allow the numbers to work today, tomorrow and next year.
Did your company respond to the consultation?
I believe, were the biggest contributor to the consultation. We've had many, many meetings with Michael Harris and members of his team. We basically did a 26-page report contributing to it. So from our perspective, that's something that was, it was extremely important, and certainly we've been involved in that process, because as the largest of these businesses in the UK by a significant margin, we're maybe 10 times the size of our next contributor, it was important to us.
According to the proposals, which there was 4 of, looking at them, they all except for one suggest a step down. There's only one proposal, 3, that actually wanted it sat at 1.65. Now it seems that the department basically has went for the least. Do you know what one you were? What proposal?
The department have actually gone with the one we suggested.
It's the lowest, but I'm sorry, but let's be absolutely clear. The price, as you get bigger and as it becomes more business as usual, will go down. So we need a 7% return gross for our investor and to run our company. We do not need a 10% return. You can take a short-term view and try and milk this, but our attitude is, particularly as the largest in the market, and therefore it suits us to be able to do that because we are the largest, we basically took an approach of what can we actually build these things for to make a fair return. If you do it any other way, then you'll be hung up in process for the next 24 months. Speed for us is much more important, and getting certainty about what's going to happen at the point at which our planning and our grid applications get approved.
So you suggested in your proposal 1.6 for 14-15, 1.5 15-16, and 1.4 16-17.
Yeah. Because it would be ridiculous of me saying, by adding 24 months onto the process, why we would want a tariff higher than what is currently in place in the UK. If we can build on 1.4 in the UK, then all I'm wanting is, in light of the fact that you're adding 24 months on, I want the same tariff to be in place 24 months from now. Completely fairly, in our opinion.
But would it not be better even then to go 1.5 right across those 3 years? Because what you're losing...
better to go to 2.5, but the same...
that first year is 2014, 2015, sent at 1.6.
Yeah.
But that won't incentivise new people to come in if it's going to take 2 years at least to actually get into the installation stage. So if you were to reduce that to 1.5, and then on the 1.4 on the 2016, 2017 year, have that 0.5 or 0.1 there added on, and have uniformity over the 3 years?
I don't think so, because we're talking about large scale and we're talking about ground. If you look in our book there, the likes of Bentley, we've got 5.3 megawatts on the roof of Bentley. Now that's a rooftop.
But is that not a different rock? Is that not 2?
Well, the principle is that one basically falls at the same pace as the other. I'm using a roof as an example. So there are circumstances, albeit unusual circumstances, where there could be a substation in the corner of a site. Very, very unusual, and I wouldn't put too much money on it, but there could be. And what we wouldn't want is a situation where we're in a position where we can't do a site simply because of the fact that we've changed. In other words, it makes absolute sense for it to fall over time. It makes sense for it to fall over time, but to fall with an eye on the fact that there's a lag between today and the point at which we would actually connect. We will connect some things, we believe, next year. All we're saying is that if this was in GB, the majority of what we were actually building today, or working on today, would be built within the next 12 months. Some of it will in Northern Ireland, but the majority will be pushed out further. Not all, though.
So you're the ones that you have in the system at the minute. You're looking for this year and next year. So you're looking at 1.6, 1.5.
One of them.
What could I suggest? Well, could I suggest, playing devil's advocate, for any new companies, albeit rival companies coming in that have to start the process from scratch, they'll have to avail of the 16-17 year, which is 1.4. So again, they're at a disadvantage straight away. So stepping down won't necessarily incentivise the market. It might well just give you a leading edge opposed compared to your competitors.
I'm not convinced that they would see it that way. Plus, I also think that in order to get people into the market, it's the 1.6 that will get them interested. They'll come in, they'll look at the market, they'll see that the process is elongated. If it's 1.5 across the board, then they'll stay in the UK, because irradiation is what they normally look at. We're not hiding behind irradiation. We know that we as a technology have to fight with other technologies. You know, we can't say we need more money, and we have never said we need more money for this because it's not very sunny in Northern Ireland. That's a completely rubbish argument. We have to take what we've got.
But if you're saying that they won't come in here, it won't incentivise the market at 1.5, how is it ever going to do it at 1.4 in 3 years' time?
Yeah, but that same logic would say, well, why, if you're looking to incentivise the market, then by all means do. I have no problem. Competition we don't have an issue with. We don't want to be 100% of the market. You could, by the same argument, have 1.6 level across the board. All I'm saying is what we don't want to happen, and I'm fine with the 1.5 across the board, except for the next 12 months, if any of the sites, albeit it will be unusual, could have got under 1.6, but actually fell foul of that and only got to 1.5. So for the very small circumstances, very unusual circumstances where we got a site that worked, only for that reason would I say, no, I prefer the wet steps down. If you're suggesting 1.5 across the board for 3 years, then I'm absolutely fine with that, because that's better for us too. We have absolutely no fear of other people coming into the market. No fear whatsoever. In fact, it almost backs up that we're not making a mistake going into this market if other companies come into it too.
Okay. Okay, thank you.
Thanks very much for that. Just following through at the 1.5, I just want to tease this one out. The embargo on the Chinese stuff is 3 years' time.
December 15.
Yeah. But if you keep it at a flat rate, people will hang back until that's lifted. The incentivisation and the staging down, from my point of view, where I'm looking at, put it to you this way, if other companies aren't alive and awake to come in and see opportunities there, well, that's their problem. That's Frank.
Correct, but
that's the nature of it.
My assumption is you're not just talking to Lightsource, you're trying to kickstart an entire industry.
Oh, totally. Yeah. But if they're not awake or alive to business opportunities, that's frankly their problem, and that's an issue that they have to address in terms of who's running their companies. So do you take that point then about the...
Absolutely. We're going to have a very, very busy first quarter 2016.
But if the incentivisation is graded, it is an incentivisation. If it's flat-lined, it mightn't be an incentivisation at all, because people potentially could hang back the maximum profit stage whenever the bar is lifted.
Look, flat is an interesting concept which I've never had suggested to me before. Yes. It naturally goes down in price as the sites become bigger and it becomes more familiar. There would be a circumstance, which is the point you're making, that actually 1.5, if the EU, and by the way, the EU might extend the 56 cents, but if they didn't, you could have, or they may not, you could have a bumper number of months because you're getting paid 1.5, which is significantly more than you would get in the UK. Happy days being in Northern Ireland was an advantage.
Yes.
Which is why I think realistically the step down is more normal.
And on that, just for my own clarity of mind, the rocks that are available in the UK or Scotland, whatever it is, could you just give us a comparator as to what, or comparative rather than a comparator, as to what they are in relation to ourselves?
Okay, today they're
in relation to ourselves as is being proposed.
Well, they're exactly the same as you have today. So it's 1.6 until the end of March.
Yes.
And it goes to 1.4, then 1.3, then 1.2.
Right.
It completely mirrors it.
It mirrors it.
Right. Now, following on from that point then, the drop from, I think it was 3.8 million euros per megawatt that you suggested, down to 430k then bumped up again because of the Chinese thing to 560. How is that being factored in? Because quite clearly that means to say that your source, the panels that you're bringing in, clearly increases the profitability of the company from very significantly, in fact, probably back down to, even with the EU intervention there, you're probably down to about what, 1/7.
Unfortunately, the Two Rock 1.6, 1.5, 1.4 was set when the panels had not got an EU fixed price. So
they were set at
prior to the 56. They were set when we were buying at 43 cents. So that's my point. We should be sitting in front of DEC. We did sit in front of DEC and say, guys, the Two Rock 1.6 is incorrect because you were using pricing that is no longer relevant because you've just increased the price by bringing this EU directive which fixes the price of Chinese panels.
So prior to that, whenever it was coming in at the 3.8.
Yeah, that was 2006, so there was nothing in the UK at that point. That was in Spain.
Oh, no, that's okay. And the price drop to the 430k, that was when, just so they can get a bit of a barometer?
Well, that was the cheapest we ever bought. I mean, I'll put this into perspective. Whenever we started building in 2011, our tariff was 30.7 pence.
Yes.
We're now talking about 6 pence.
Right, okay.
So to put it into perspective, the tariff has absolutely, I mean, overnight it dropped from 30 pence to 8.5 pence. We've swallowed all that. We're now at 6.5 pence. So we're not talking about massive amounts here. As I come back to our financial...
I appreciate that.
Yeah. So all I'm saying is, if we were in a position where the EU had not, which we absolutely, I mean, I don't know how many meetings we had with, Westminster to push back against this EU directive. If we were sitting in a position where that you have to pay 56 cents was not in place, then we'd be in a much rosier place. But we are. We tried to push against it.
Right. Okay, thanks very much for that. I have Mr. Agnew. Stephen.
Thank you, Chair, and thank you for the information so far. In terms of this issue, the perceptions out there that we could fall into the same trap to some extent as we did with biofuels, food versus fuel, kind of arguments. What would your response to that be?
Yeah, I mean, I think one of the big advantages with solar, not so much in Northern Ireland, but in the UK, you've got grade, correct me if I'm wrong, grade 1, 2, 3A, 3B, 4 and 5, which basically looks at different sort of land and says, grades it in terms of its arable right the way through to it's not really worth anything. From our perspective, our major focus is to focus on 3B, 4 and 5. So it tends to be, remember, all we need is the land to point up. We don't need it to be prime land, it can be a dirty site, it can be brownfield, it can be anything, because ultimately we're interested in what's above the ground rather than what's below it. So certainly we don't tend to go for prime arable. However, if you look at the pictures that are firing around, there's sort of 7 or 8 metres between each of our rows, and on a very high percentage, we go for planning on all, but on a significantly high percentage of our sites, we already have sheep grazing, we have chicken grazing, we have llama grazing. So basically you're in a situation, which sounds funny, but we do, we have a situation where we're basically allowing the farmer to have 2 different revenue streams. So he continues to farm the land. We also, and we're doing a lot of things with a lot of stuff with the National Farmers Union, because we're also bringing in flowers, bees, etc. So if you like, we're a form of biodiversity within. So you're setting aside some of that land. But the argument in terms of are we taking prime agricultural land and using that for solar, certainly from our perspective, we believe that that's inappropriate. That's certainly not something that we promote. But certainly if you talk to the National Farmers Union in England, their opinion would be that we would have to go an awful long way and an awful lot of years installing an awful lot of solar before we would ever be in a situation where we were impacting on the UK's ability to feed itself simply by installing PV.
So I suppose just to be clear, because I mean there's nothing to prevent a farmer switching from using arable land for solar, and certainly the financial incentives. And just to get clarity, you said in your document it's £400 to £500 per year per acre. Is that a set price, or is there inflationary increases?
No, it's index linked, RPI linked. Everything is RPI linked.
Okay.
And the 400 to 500, just to be clear, it depends on the size, because there's economies of scale, and it depends on where the grid is. So if the grid is in the corner of your field, you're looking at 5. If it's not, you're looking at 4. But ultimately, we run a financial model to get our 7% target, and we work back to say, therefore, this is how much we can pay you for your land, full stop.
But I'm just from the farmer's point of view on the arable land. I mean, it's fine saying that it's not your intention or whatever, but why would a farmer not switch, given that's a fairly good price for land rental, when, as you say, you can continue to have grazing land, etc.
Yeah, I mean, certainly our limiting factor is not farmers who want us to rent their land. That's not what it's about. For us, the limiting factors are where the grid is and where we can get planning.
Yeah, it's also properly sited. Not every farm will work.
Yeah.
But certainly, have we ever had a situation where a farmer said, no, I don't want that amount, I want to continue to farm my land for a third of... No, we've never had that problem.
Yeah. So the potential's still there. I mean, your experience in GB is maybe that it's not likely. Would that be fair to say? Or
that's never the driver.
Yeah.
It's grid first, planning, land. Mm-hmm.
Just around planning, obviously we've seen, certainly in Northern Ireland, the resistance to there was a lag, I suppose, between wind developers coming in and the community kind of resistance to wind. We haven't seen the same levels of opposition as GB has seen, although I think that is increasing. I'm looking at Paul because he's a member of the resistance. But it is increasing now in Northern Ireland as people see more and more wind farms, see more and more turbines go up. Is that a problem with solar? I mean, I know they're different, as you say. You know, the visual impact is arguably less, but you're talking about pretty big scales when you look at some of the size of the farms.
But I mean, install a big hedge and you won't see it. I mean, we're talking about 2.5 meters here. Mm-hmm. So, I mean, let's not stick it on the side of a hill so everyone... I mean, the argument with wind is, by definition, wind needs to be somewhere where it's windy. Yeah. So you can't hide it away, because it has to be windy. So it's got to be exposed by definition, which means it can be seen. Visual impact, therefore, becomes an issue. Mm-hmm. With solar, literally, it is anywhere that points up, which tends to be everywhere. So we can put it in a sensible positioning. We also build things. I mean, Cornwall was where we have an awful lot of our sites, as you'll see from the map. So we build what's known as Cornwall hedges around the outside. This is a 3-metre hedge, literally, and there's some pictures on our website of this is a view of our site from literally the next field, and it's a nice picture of a hedge, because you can't see it because it's only literally that high. So we don't get... I have no problem with wind developers, renewable energy of any sort. However, we do definitely benefit from well, at least it's not wind brigade.
And then what percentage of planning success would say just your own companies win farm proposals?
About 80. We're hitting 90, but about 85 is our...
And of those 15%, what are the reasons for rejection?
You're probably better covering that.
Yeah, just obviously from local opposition, so inappropriately cited, or there was neighbours, or there was a listed church that we thought that hadn't got an impact, but Environment Heritage have come back and said they think there is a view. So of those applications, I think of the 85%, I think 6 were refusals. 5 went to appeal. We withdrew 1, and we've won 4 of the appeals now since then.
Okay, and then sort of planning related, again, an issue coming up with wind. I suppose the Northern Ireland wasn't ready for some of the big wind companies, in the sense of communities weren't appreciative of actually the benefit they could get, and so they came in, individual farmers, etc., where land was rented, got a benefit, but the community didn't. The community's empowering itself now and actually saying, no, well, we want to see some of the benefits seen in Scotland. Is there community benefit funds attached with solar farms? And
so
do you have a a set level per megawatt, or how do you assess, what kind of community benefit?
We're still working that out in Northern Ireland, but yeah, I think again 80% of our applications will be assigned. There'll be either a community benefit, or a school will get a system on its roof, or we'll be speaking to the local neighbourhoods. All of our applications, we have a huge public consultation process that obviously doesn't happen in Northern Ireland. Of the 2 applications we've submitted to date, we've had large public consultations in local halls and local schools.
You've chosen to.
Yeah, and it's something routinely we do because we do it already. We're already sort of built for that, so that's what we're doing over here in Northern Ireland. And I think that's something that's been welcomed by Aaron Garvey from Planning Service.
We've built a lot of cricket pavilions. Let's put it like that.
Yeah.
Maybe not so strong in Northern Ireland, but that's what we tend to do.
Yeah. So
the communities ask what they want.
Yeah.
Okay, thanks for that.
One wee supplementary, because it is about the food versus fuel type argument, and you talked about the single farm payments not being affected. Surely that can't be the case, because trees affect single farm payments.
Yeah.
Ecological land
Yeah.
strips affect single farm payments.
Farmers ask us routinely, and our advice has always been, because it's a legal matter, listen, you have to go. It's a bonus if you get it. It's up to you to go and find it if you can do it or not. This is what I'm going to offer you. More recently, I've been speaking to one of our panel lawyers, and they were saying that they know of 5 of their own clients who've actually got it with our solar parks on the site. Now they've got it. It has been reduced because what they do is they have to take out where the posts are in the ground. So they work out a calculation. So they don't get it where the posts are.
Yeah.
They don't get it where the transformer blocks are. But that's a very small proportion of the Bora field. There's 6 to 7 metres between these panels, and the posts in it, there's one post, there's maybe 2,000 posts, but they're this thick. So it does take out a small proportion of that single farm payment area, but not a lot.
So you're telling me that the solar panel itself?
No, underneath that, because there's grass underneath that, and not so the sheep can graze underneath those. So the ones that we've got grazing on, we're just taking out that area where the actual post is.
Gary, can I ask just on that, if beneath it is shielded from the sun, its capacity to grow
It's not shielded from the sun, so you can see from those photographs.
The sun tends to move a bit.
Yeah. So
No, I'm well aware of that. But
no, it's interesting because we actually had a member of Parliament in England was going, I'm not stupid, I understand the way the way photosynthesis works, there's no grass. So we brought her to a site. First of all, only 30% of the land is covered, first and foremost, and it tends to be 2 metres.
What about the lack of rainfall?
Well, the interesting thing is the shelter is an interesting positive byproduct. In the sheep that tend to graze, actually, they see a positive, given that they're not trying to keep themselves warm. They can shelter under the panels, and therefore there is, you would argue, a plus in terms of the weight that they can actually put on. So
for any solar park, it's only a quarter of the field. So even though the field in the photographs we're showing you, it looks like it's covered in blue, it's a quarter of that site that's actually blue. In between the rows are obviously quite
well,
massive.
there's some photos you can see. You can see the space.
So we've got.
I'm genuinely interested in how this works, so at some stage it might be
You should come over and see one.
It might be helpful for us to go and actually view how this works.
Absolutely.
We've brought NIE over.
NIE have been over to see one of our sites already.
Just one other thing sorry, Paul, will you finish there?
Yeah, I think that maybe it's something that the committee should maybe scrutinise more.
Members here.
Explore. Yeah. No, just he's picking up on a point there.
It's a valid point. Single farm payment is crucially important to farmers, so I think it's something we need to be ironed out.
That's okay. Now, there is one other thing that I wanted to ask you, and that's, again, I'm getting into an area that I know nothing about, and I'll be the first to admit it. In terms of how much energy it generates, now, where I represent, there's a big issue around a major wind farm development, very contentious in that. The efficiency of solar panels versus the efficiency of wind, and that now it's probably an engineering question or a technology question, whatever. It's just one thing that intrigued me for the investment that's made, solar farm versus wind, and you may well want to expand on that at some other stage and provide me with some details around it.
Well, no, you're comparing apples with oranges. I mean, basically, the way to think about it is probably in terms of households. So our crude rule of thumb would be that for a 5 megawatt plant, which is a 30-acre plant in Northern Ireland, approximately 1,000 homes would have their energy delivered.
Right.
In the UK, it's about 1,200 homes per 5 megawatts, but it's not as sunny.
The same acreage of development for wind, and well, we're comparing apples with oranges, but it's the same level of investment and outcome and those sort of things.
How many wind turbines can you put on 30 acres? It depends on the site. Some site you could put 3 on, some you could put 1 on. But you wouldn't take the whole site, you just take a little block around.
I appreciate that, but I'm trying to compare this in my own mind, and maybe some stage we could have a further conversation with some of your technical people about that.
Yeah. Well, I can do it in megawatts, and the very large wind turbines that you see going up are maybe 2.5. Yes. There are bigger ones, but the ones here, 2.5 megawatts. So that's 15 acres worth of solar.
Right, okay.
In terms of installed capacity.
Chair,
Gordon, I'm coming to yourself here now, so...
Thanks very much. Just at one point, we have carried out quite a bit of work within the committee looking at the cost of generation of electricity, and you're probably aware of it. We all do recognise that Northern Ireland is one of the most expensive places for energy costs. In relation to that, there is a perception that renewable generators are making considerable profits. And certainly they're making much more profit than a lot of the conventional generators. Do you feel that that is sustainable in the long term?
Do I wish it was. I think that definitely there are clearly differences between different sorts of technologies. The advantage with solar has always been its boring and predictable nature, and therefore as a means of creating retail investment, it's been something that's very attractive. So if you look at the returns that can be generated from solar when compared to wind, there's a significant difference between the two. And there are advantages with both. Solar would not generate the same IRRs as the likes of wind, and that's widely accepted. So from our perspective, our business model is predicated on us delivering a 7% IRR, or a 7% return, and that's obviously gross to us. We then pay ourselves and pay a return to our investors, whereas wind would clearly be up into the double digits. So is the solar sustainable at 7? Maybe it could drop to 6, but much further, and you're just we're better not investing the money in solar.
What about against the other conventional generators? They obviously have large overheads.
Yeah, I mean,
on an ongoing basis.
Yeah,
fair that you're getting incentives at the same level or same rate. Is that fair? Sustainable in the long term?
In terms of, I mean, the difference between us and other generators is that other generators aren't actually generating; they're just changing coal or gas or oil into electricity. We're different in so much that we're truly generating. So, if you're comparing our profits to the likes of the Saudis or the Russians and their gas, then clearly we're not making anywhere near as much as that. You're making a jump.
What about the local generators, though?
But the local generators are not creating there's no feedstock as such. We're utilising the sun rather than... Which is free, exactly. Yeah. And it's great that it's free. However...
You're making big profits. Is it sustainable? Are those profits sustainable?
Well, let's be absolutely clear. The profits we're making, and profit is a weird word, we're making a 7% return, but that 7% return not only has to run our company and make our profit, but it also needs to repay the investors that have put the money into our company in the first place. So 7% return gross is not amazingly high in anyone's book. For us, what we're about is large volume of investment. So that's why we've invested, 1.1 billion, but it's certainly not a high margin investment, absolutely not. So is it sustainable? It's probably more sustainable for longer because of the fact that it's realistic in terms of its returns.
Do you do any small scale schemes, or are you just interested in the larger scale?
Well, we just bought a company called Renewable Resources last month, and it's the largest installer of rooftop in the UK. It's done 770 roofs, so we're intending to move into that space. We have 97 schools and 30-odd small scale, but the majority of what we do is very large scale. I mean, again, it's a completely different niche, domestic to large scale, and it's not something we've done before.
The connection charges then? Working on the large scale, is it much more cost effective than working on the smaller scale in relation to?
Well, I mean, the small scale...
The issue of connection charges, which we hear a lot about. What Northern Ireland's about 3 times the cost of what it is in the rest of the UK.
Well, no, that's allowed for, though. If you install a 50 kilowatt system today, you get 4 ROCs. What we're debating is for the same electricity getting 1.6 ROCs. So yes, there are economies of scale, which is why you can afford to pay us 1.6 as opposed to 4. But there's a point at which, they can grid connect into the local 3-phase supply. We have to build an entire substation or go all the way to the substation. So you're really comparing apples with oranges. It would be really simplistic to assume that you know, you can look at a 50 kilowatt system and compare it to a 5 megawatt system and just set something 100 times the size. The considerations are different, which is why you pay us less for the big ones, because there are economies. However, if those economies come with the price of having to spend massive amounts on grid connection, then it no longer works financially.
Just generally, what sort of farmers do you see would be interested in taking up your system?
Well, there are not. We've seen a number of older farmers whose kids are.
Have you done some research on that in Northern Ireland?
In Northern Ireland, we had a very big stand at the Ideal Home Exhibition.
And the Balmoral Show.
The Balmoral Show, and we had 156 people who filled in forms saying, yes, could you please come and sit down with us? And certainly, you know, if you're an older farmer, if your kids don't want to go into farming, etc., this is a great way of not having to sell the land, but getting a long-term income. And then you've other farmers that have got a couple of 100 acres for the sake of arguing and are saying this is a way of them diversifying, putting 30, 40, 50 acres into this, along with other forms of crops.
Say high ground where you mainly have sheep farmers or dry cattle grazing. Do you see those sort of farmers going for it?
Well, it's perfect for us. It's the visual impact. I mean, if the planners will allow us to do that, that's perfect, because they continue to get the grazing. As I say, we don't care that the land. Remember, the land being high or the land being not very, you know, good from an arable perspective.
What is the plan, or what is the planning?
It's visual,
visual impact.
Yeah. So obviously you're not going to put it on.
No, there'll be instances where you can, and it's surrounded by trees, but poor land is what we're going for, generally over in the UK as well.
But obviously, poor land tends to be in a higher ground, so the planners are not allowing it.
No, it's not always. I mean, you could have dirty sites, you know, old industrial, you can have brown sites, you can have old Air Force bases, you can have airfields, World War II airfields bases. There are loads of examples of land that isn't prime land, poorly drained, etc., that we will take that isn't necessarily up a hill.
Well, can you compete with dairy production, for example?
Dairy's a problem, given that if a dairy cow walks into us, I think a sheep won't damage our installation. But
I'm talking about the cost.
Yes, we would be able to.
And dairy farmers are always after more land. To take land at excessive cost.
Yeah.
Can you compete with that?
Well,
price per acre.
We believe at £500 an acre we can compete with that.
You'll see. You'll be surprised. You will be surprised. And the planners generally, PPS 21 has come in here fairly recently and relaxed planning a number of issues, and many ways been very positive. How do you feel the planners will react to your schemes in Northern Ireland?
Yeah, well, we've met them. We met the directors before we even started submitting applications. I used to work in the planning service, so I know all the people involved. And the application we've got on at the minute is going through the process as I would expect it, so that they.
Where's it for?
It's in Downpatrick.
No, it's Upper Ballinderry, Lock Road, Upper Ballinderry.
Downpatrick one's through.
It's in Downpatrick.
But we've got one down there as well, and we've got
Where's it?
2 in Ballymena. We're going for
Downpatrick.
Bishop's Court Airfield.
I know it well. I'll be there on Saturday. I'll be well. Right, Chairman, thanks very much. Thank you.
Gordon, thank you. Mr. Anderson.
Thank you, Chair, and I'll try to be brief. And thank you, gentlemen, for your presentation. Much of what I was looking to ask has been asked. But I note here that your installations in England and Wales, your prime sites would be more in the south and the Midlands and the east. Have you any idea for Northern Ireland, or do you think of all of Northern Ireland in its holistic?
The reason why they're in the south is that whenever a grid wasn't an issue, you went for the sunnier areas. Not surprisingly, so we started in the south and we're moving forward. Northern Ireland. I mean, if you actually look at it on the solar map's an interesting thing, which we might have a copy of. The right-hand side of Northern Ireland is actually sunnier than the left-hand side. I hope I'm not offending anyone with that, but that's just the way that it is. In the same way as in Scotland, up the right-hand side of Scotland is better than up the left-hand side. It's just the way the curve of the Earth happens.
But we would choose any area.
We would love to choose anywhere if there was a grid and we could get it through planning.
Being a rural dweller myself and have been a representative in local government until recently.
Exactly. I'll leave you my card.
Can I ask, have you had any dialogue or consultations or talks with farmers or the Ulster Farmers Union or with rural organisations or say, like a rural development council or the rural community network or any of these people who would be very much representative or speaking on behalf of rural dwellers?
Well, in England, we deal with the NFU, and they're in our offices regularly, and we deal with the CLA.
We've engaged the Ulster Farmers Union here and young farmers as well.
And what's the feedback coming from there? I'd be interested to hear a bit of the feedback. What's the indications that you're getting?
It's very positive for the reasons that Nick has pointed out before. You have the diversification, the appeal of diversification and dual income. You've also the elder farmers who maybe don't have anyone coming through following behind them that are looking for almost a pension. The younger farmers who are embracing the new technology and new ways of generating income from their land. So it's all been very positive. As Nick says, with the stand.
Say very positive. You're getting no objections to it.
The objections are from people who live or perceive to be living nearby. And they think
it's not the farmers.
So of the 3 public consultations that we've had so far, about 60%.
But they're part of the community.
Yeah, no.
You know what I mean? And this is what wind turbines have been.
60% of the people who are coming to the public consultations are coming to say, "What about my land?" So it's an unusual situation that I've been in. They're not going to argue.
I mean, the feedback that we get from farmers, and some will say when they hear the sort of levels of rental that we are able to pay, they'll say that's not good enough, and that's fine. That's their prerogative. They walk away. We cannot go above those sort of levels for a project to become viable. So
but there are different people who are on farmers who are custodians of the rural land and the rural. And there's a big swathe of people here who I see would be very much maybe. If I'm right, who would be in opposition to this, quite honestly, with my experience, say, to wind turbines and other projects for the rural countryside, should have been even anaerobic digesters that we talked about earlier on, where in one case I had 400 objectors to an anaerobic digester. You know what I mean? So there will be these things coming along. But what I'm saying is, can you see yourselves get to a position you can get these people on board and encourage them? What the benefits are.
The ruining our green and pleasant land is not just a Northern Ireland mentality. I mean, we've over 4,500 acres in GB that have had exactly the same considerations. But if you do it in an inclusive and you take time to explain the situation, then not all of the planning will get through, or not all of the we not even choose to put all of the applications in. Stephen's question was about how many of the planning applications that we get put in come out. Well, I'd answer 85%, but we don't put everything that we could do in.
Last year we put 29 in. We looked at 1,350 sites to get 29 applications.
So, I mean, you're right. You've got to kiss a lot of frogs, but it doesn't tend to be the farmer who's got the land that is the issue. It's the other individuals around there. And do you know what? There is enough land, and then some, for us not to have to. Why? It doesn't have to be difficult. If that one isn't going to work, then there is plenty more land to go for.
Looking from your brochure there, most of the land seems to, those panels, or a lot of it on quite good land. I'm just having a quick look at it. And taking up the point of my colleague, Mr. Dunn here, I get the opinion then that possibly it'd be good flat, low land that you're going on if you can get the planner to say, OK, we'll let you go on the side of a mountain.
Yeah, I mean, certainly is it easier to build on flat, well-drained land? Yes, than a mountain. Having said that, there are many different circumstances. There's no one silver bullet that says this site will work. You have to take in grid. You've got to take in the local planners, the neighbours. Whether or not the farmer wants to diversify into something different. All of
those sites are grade 3B. Not one of. I think one site we've got, but not in those photographs, is grade 2. So all of those are grade 3B.
So it's grazing land.
Which is used a lot in Northern Ireland.
Which is used a lot in Northern Ireland, exactly. And
95%
the number of cows on the land.
Well, sheep, 95% of ours are sheep.
Yeah. But it's an interesting debate and discussion. It has been very helpful to listen to you and your ideas, and certainly we look forward to see what's coming forward again. Thank you, Chair.
Thanks, Cindy. Mr. Flanagan. Phil.
Thanks, Patsy, and gentlemen, thanks for your presentation. I'm sorry I missed it, but I was under the impression that maybe Hansard was here, seeing as we're discussing this legislation. So is there any chance of getting this?
We're going to have it retro.
We get that done, aye? Okay. So I've no idea what you said, but
it was really good.
I presume you're looking for more money.
sunshine and light, Phil.
I think they're looking for more money, Patsy. Can I ask you about your opinion of the system marginal price within the single electricity market? Do you think it's fair that as the price of fossil fuels continue to rise, that the price renewable generators are paid per unit of electricity continues to rise also? Or would you be satisfied with some form of a fixed price per unit rise, maybe in line with inflation?
First of all, I have to say that the three people in front of you are not the right people to ask that question to, although we do have people that would love to answer that question. What I would say is, though, from a macro perspective, all that we're looking for is, we're looking at a price of installation and the amount that we can generate from that installation, and we've got to make sure that one is able to pay for the other, allowing us a 7% margin. Other than that, what's going on external to that in terms of fossil fuel prices, etc., are in no way taken into account, except we make a prediction using Pori forecasts as to where the long-term electricity pricing is going to go, because we're selling this wholesale electricity if it isn't plugged directly into a user, and therefore the price of electricity in a market comes into play, but only in that sense and no other sense.
So that's the price it's going to be in the future,
That's the price going to be in the future, yes.
But do you think it's fair that as the price of fossil fuels goes up, the price for renewable generators also goes up?
How does that work?
That's the way the system marginal price works in Ireland.
No, well, and we're talking about the tariff here, the renewable obligation certificate, which is the tariff over and above. So the fact that the electricity that we create and we're able to sell is then in a market is sort of slightly an aside from what we're talking about here. This is the, if you like, the for generating renewable electricity. It's that rock bit. That rock bit is not affected by all of those.
No, I appreciate that, Nick, and you have said that. And I appreciate you probably don't understand the system marginal price as well as we do, and we don't understand it as well as we should either. But if you want to go back, and that's not something, it's not something about this particular piece of legislation and amending the ROC payment. So I'm more than happy for you to go and look at that and talk to somebody that has analysed the system marginal price and go back to us in writing if you want. But what I'm trying to say is, you're saying to us that you need a greater level of incentivisation per unit of electricity to make this profitable. But the price you're going to be paid for electricity in the future is probably going to continue to rise, because the price you're paid is based on the price of...
But that's all in our financial model. We're not saying that. What we're saying is that we want to have exactly the same system as mainland GB. The only thing is that because of Northern Ireland's special conditions, it takes 24 months longer because of the processes than it would do. And all we want is you to identify that fact and pay us 24 months. In other words, if we were building something today, and we sort of covered that, it would take 9 months. Whereas if we're building something here...
I haven't got on to that point yet.
All right, okay.
That is another point I want to cover. The point I want to talk about is actually how much you're paid per unit of electricity.
That's all factored into our model, and that's why we're able to say that the model either works or it doesn't work.
Well, from 2017 on here, we're going to have a feed-in tariffs with contracts for difference, which means that if the price of electricity continues to rise, or the cost of it continues to rise, then the level of incentivisation that renewables will get will reduce. Is that something that you think is a better system and fairer?
Well, it's the system that's coming in 2017, whether we like it or not. I think it's a more transparent system. It also it's more reassuring from our perspective, because it's moved to more like a FIT type structure. We know exactly where we are. Whereas at the minute we've got fluctuations beyond our control. So the move to ROC, from ROC to CFDs, is not something we have a problem with. In fact, clearly we as a business have already run over all our financial models. We know where we need to get to in terms of a megawatt of pricing, and we're working towards that now. So is the system better or worse? I don't know. Is FIT better than ROC? Is ROC better than CFD? They're all just different ways to subsidise and kickstart and maintain an industry. So from that perspective, if that's the one the government feels the most appropriate, that's the one that we will have to put up with.
But what we're discussing here today is the level of ROC payment you're going to get for the next 20 years.
Yes.
And if the cost of electricity triples in the next 20 years, you'll be getting 3 times the price for electricity, but the same higher level of ROC payment. And that's what we're trying to figure out, whether that needs to happen or not.
Yes, but
do you understand the point I'm trying to get at?
Yes, but remember, so does the financial model that has brought us here to say, guys, this doesn't work on 1.6 ROCs. So we use Pori, who are a company that we pay an awful lot of money to give you, here's where the electricity price is
So
going
you've
to go
hedged your
over the next...
investment over 20 years based on an increase
on their
in
prediction.
So if the price of electricity doesn't increase, you lose money?
Correct.
Okay, well that's fine, that's different.
So
you wanted in that point, no?
No, just on the 7% of a margin, does that just doesn't include the rocks, surely? That includes the system marginal price also, because it has
everything, yes, clearly. So we get two forms of revenue, whether it's CFDs or ROC, and also we get to sell the electricity.
Yeah.
The electricity that's not predictable. ROC is predictable, this one isn't. So therefore, if it was all ROC, brilliant, because we know exactly where we are. This bit isn't predictable, and therefore we pay Quarry or Red Point or a number of other companies, but Quarry is the biggest one, to say, guys, could you tell us what the electricity price is going to be for the next 25 years? And if we ever want to borrow money off banks, or if you ever want to make someone do an investment in you, they need to see that report in order to say, well, hang on a second here, how much am I actually going to be getting for, how much are you, because I'm putting money into you, going to be getting for your electricity? So we don't presume to stick our finger in the air and say, hey boys, we're getting 5p today, but we think we'll get 10 in 5 years. We outsource that to somebody who's infinitely more intelligent and spends an awful lot more money on analysts, etc., to be able to say exactly what the pricing is going to be. And they take into account fossil fuel prices, the Russian situation, the Saudi, how much have they got left in terms of reserves. All of that's taken into account in order to come up with that prediction.
Okay. In terms of maybe somebody's answered this already, or asked this already, but the differential between the time it takes here and in Britain to get a project up and running, I don't understand why that means that you need more money. Can you explain that to me?
Well, as you said, the feed-in tariff drops over time. So if it takes longer, if it takes me, if I can get it in this tariff, if I'm building something if I start from a standing start in England today, I know I'll get it on 1.4 rocks. If I start from a standing start today in Northern Ireland, I know I'll get it at 1.2 rocks. Yet everything is exactly the same. So I'm in a situation where I'm getting less because of the elongation of the process here than I'm getting in mainland GB.
Don't get it.
To be fair, we've spent quite a bit of time on this already before you came in, Phil.
So, because it takes longer to get something up and running here, that means you need more money. But even though if it's going to be 2 years later by the time you develop the project, the price of electricity may have went up by X.
That's all taken into account when I'm telling you it's not affordable. Have you also looked at in terms of the grid connection? So, giving the example we used it's not just about timing. It's about timing and about the fact that there isn't a grid here that is sufficient, and the grid rules that say we can't tee off a line. We've got to go all the way to substation. So, an example we used was in the UK, it costs us £250,000 to grid connect a site. Exactly the same site in Northern Ireland costs us £875,000. Why? Because your processes are different. They don't need to be different, but they are different. And therefore, that £625,000 is not magically produced. It has to be produced from somewhere. Where is it produced from? It's produced from you paying us an extra tariff by virtue of the fact that Northern Ireland's different.
I think we've sufficiently exhausted that one.
Okay, can I make another point? There's one really important point. We're building an infrastructure that lasts 60 years.
Because we have a lot of stuff to get through here.
So it's a 60-year infrastructure. We're buying all of that kit, the DNO, and it lasts 60 years. We'll be using it for 25, and anyone else can use it during that 25. So it's not as if we're keeping all of where the money goes. We're actually upgrading and expanding the infrastructure within the UK, and that's owned by NIE. It's not owned by us.
Yes.
So that money isn't wasted. It's going into infrastructure that's owned by Northern Ireland.
And are you building or sourcing any of these solar panels locally?
Solar panels locally? No.
And where are they being imported from? Germany?
No, we have, let's say we've 600 megawatts, we've more than that, but let's say 605 megawatts are not from China.
So there's only 5 not from China? There's not an issue with importing solar panels from China?
There's not an issue with it, there's a pricing issue with it, 560,000.
Again, gentlemen, we've covered this in considerable bit of detail before you came in, Phil, unfortunately.
The anti-dumping you're talking about.
Okay, that's grand. Right, Patsy.
If you wanted to continue maybe the conversation, afterwards.
They're not there.
About it.
Having a road kit.
we're going to get it retrospectively done anyway. So, gentlemen, thanks very much indeed for your time. That has been very, very useful to us. Probably shed a lot more light, if you use that analogy on it, than the department did for us. But again,
heat and light.
hopefully heat and light too. So, thanks very much indeed for your time and being with us. And hopefully, at some occasion, we'll actually see some of this stuff in operation too. As but remember.
Thank you very much again.
And good luck anyway. Okay, members, just to further move on in this one, it's the committee's opportunity to consider the policy as set out in the SL1. Now, we have also an informal meeting arranged for the 23rd, isn't it, Jim?
25th, Jim.
Sorry, the 25th, with the other company that wanted to speak to us. It's an informal meeting now. We have the choice, either deal with this, get it done and dusted here today, or hold back to the 25th and the subsequent 27th and get it done and dusted then, if there's further information that this other firm wishes to provide to us. Paul?
Yes, Chair. I don't want to prolong the meeting, but there's bound to be a time restriction on when, because this was to kick in the 1st of April, was it not? So
No, I
there's
don't think so.
bound to be.
It was, but Paul, in fairness, the department didn't come to us with enough time.
Yeah,
No,
but now I'm not so much precious about that.
Yeah.
My question is this: if you're asking me, does this need incentivised? Absolutely. Should we have more solar panels? Absolutely. It will add to the mix of renewable energy and it will add to the 40% target. So I am all in favour. My question is whether we should step down, start at a high base and step down, or have uniformity across the 3 years. That's my question.
I really think, from my own point of view, that the stepping down bit is the important bit, because if, and I take entirely the argument, if you just keep it flatline like that there'll be others will hang back. They won't bother at all, because they'll be looking ahead to will Europe or will Europe not. You know, the incentivisation, getting in with it now, is, I think, the step down.
But my issue is the 2 years it takes to go from a sourcing land to planning permission to grid connection. It's a 2 year process anyway. So even if somebody was looking in Northern Ireland now, the opportunity for them to get 1.6 ROCs is gone.
Well,
and they're looking at 1.4.
Really, the proposal that's before us here today is for the graded incentivisation. So my question to you members is, do we deal with this today, or give it another fortnight until we hear the evidence from the other people? That's the only question here today.
Sure, just question back, and sorry, I should have checked this myself before today, but do we have the other side of it, what the cost is to consumers? Because we've heard from the industry what they see, they believe it'll cost investment if we don't go ahead with what the department
I think, Stephen, without breaking your run too much there, that's from what little information we did get from the department that day, there was something contained in Hansard, and Jim, you can connect.
Paul asked that, and I think was it 250 or 450?
I think what was it, a penny or something?
But what you're asking is the value of a point one of a rock. Now remember, that's spread out over UK.
20 years.
That's right.
But I think it works out at 1p. Something gives me
I think you're right. I think we did get that.
Yes, it was a penny, I think I recall from that session.
On the consumer's bills.
Aye.
Yeah, where what we risk is investment in a major new industry.
I know that. So, anyway, back to yourselves. What do you say, Phil?
I presume, given the briefing we got from Daddy, I presume we had follow-up questions. Have those answers come in yet?
Didn't.
There's some stuff came back. I heard far more from these guys than whatever I did from that Daddy guy. No harm to him. So, can we decide what our course of action is here today? The two options that I have are, we either hold until we get the opportunity, or afford the other company the opportunity to present to us, and then that week make the decision on it, or make the decision here today.
Try it for 2 weeks.
I would worry about the implications of that and the impact of that.
If we agree that today is going to be done the 1st of April anyway, probably not.
Sorry, what's that? Well, I want to come to a considered view on this here. Just, I think myself, to be fair, if there is extra stuff that we need to hear from another company that will inform us better, we should afford them the opportunity to do that.
And to be honest with you, Patsy, I'd like to see a breakdown of estimated costs of putting up a 5 megawatt solar panel. So how much does the kit cost? How much does it cost? How much does it cost to rent land? How much does it cost to get the grid connection? How much does it cost to maintain it over 20
There's some stuff in the
and then
table
see
papers.
what the shortage is that needs
Some stuff in the table
incentivisation.
papers there today about the rent and the land and stuff, which has taken us into another area. But can we just agree, first of all?
But if we're deferring this for a fortnight, then surely we can get that information
Oh,
from
aye,
somewhere.
but I want to, are we arriving at a consensus there that we go for the 27th? Make our minds up on that on the 27th, right? Reid, happy enough with that. Then, if there's other information that we require, Phil, what was that?
I want an economic breakdown of the costs of setting up and maintaining a 5 megawatt.
I'm not sure where we get that from, other than the very boys that have just gone out the door.
Seems the boys to get it off them.
Huh?
Get it off them or get it off the department. Somebody's either regulated or somebody's bound to have looked at it.
That'll be sensitive material.
But we
Well,
can,
no, we can ask
take
for
it and hold it sensitively. like.
Right, so that Jim is quite clear here as to what we're looking for. Just the setup cost of...
All of the costs associated with building, developing and maintaining a 5 megawatt.
Why are you saying 5 megawatts?
Aye, that's a funny ask. What is it?
That would be
5 megawatt.
What are they?
They're operating at, I can't remember what they said their minimum was. I know they said it at 50.
They take it.
Who can I with them?
That's the way.
What are they proposing to do?
Even
Right,
saying
five
average.
5 megawatts is what Northern Ireland has at the minute on PV.
Okay.
Most of that's
But
domestic.
what would but an individual
An average.
an average farm?
Yeah, an average.
They're going to 100. It's 100 megawatts.
100.
That's what they're proposing.
Right,
Yeah.
we'll ask them that, 100 megawatts, this is the...
Mike, but can we ask them and this other outfit we're meeting in a fortnight and the department and the regulator to see if there's a difference in the figures we're getting?
Right, we can indeed.
Because when the department's saying this is the level of incentivisation they need, they're bound to have looked at all of the things in the round.
Okay, agreed then?
Sorry, just to be clear, sir, the cost of...
Pardon?
Your costs of...
All of the costs associated with building, maintaining and installing a whatever,
Investment
whatever
costs.
size.
100 megawatts.
100 megawatts site. Okay, thanks for that. Okay, can we move then very quickly because we're going to have to be shifting out of here shortly. Matters arising, agenda item number 6. Papers for this are at page 95. PFG Commitments Progress Report, page 96. Response from the Department to committee queries regarding the PFG Commitments Progress Report to 30th of September 2013. The committee had asked the Department for an update on the process used to calculate jobs created, what stage this process at, and for figures of jobs created if and when these were available. Now that's at page 96. Okay, unless we have any comments, I think we have Invest NI coming up to see us at some stage shortly anyway, so we can pray any further. Okay, noted until then. Next item then is the Barossa Desk Officer reports, page 98, a response from the Office of First Minister and Deputy First Minister regarding the Barossa Desk Officer's report. And I just noted that we asked for this on the 21st of November last year.
God, that was quick.
Wasn't it?
You sure it was last year, not the year before?
Great. Now, the one thing that is a wee bit unclear about this, and I read this, and facilitating Northern Ireland the Erasmus for young entrepreneurs. It says in July 2013 the college submitted an application for this call. We don't know if or not that was successful. Then on the second bit, the desk officer continues to liaise with Quando with a view to possible collaboration for the opportunities emerging from. We don't know, given that this was started or initiated in February 2013, over a year ago, we don't know if there's any progress on that. And again, liaison with regional offices, we're not hearing what the product is.
Maybe better writing to Quando to get an answer, Patsy.
You probably would by the time you're not. That's true. And likewise, I'm not sure at point 4 there what the involvement of the officers were at all there. Seems to involve the European Commission more than any of the officers. So anyway, and again, the reference is at page 103 there to stuff around DETI, and I'm not quite sure just where, on question 7, where the desk officers tend to fit into this, other than stating what the departments are involved in. Well, there's somebody over-egging it a bit, or somebody just not been quite clear as to what their role is. So if we could clarify those matters, please. Gordon, were you going to say something there?
Just looking at the date of that actual information.
Aye.
It talks there about, you know, come back to the letter of the 21st of November.
Mm-hmm.
And this other cover letter comes in dated the 5th of March.
Aye.
We're not really clear what date this information is relevant to, are we?
No, that's the point. It could be.
Could be lying for months, for all we know.
Surely. You know.
I think Nesbitt could have been handling it.
So, okay. Clarify those points. Move on then to the next item. The NISP showcase event, page 104. Responses from the Committee for Employment, Learning and the Committee for Education regarding the proposed Northern Ireland Science Park showcase event. At its meeting on the 13th of February held at the Northern Ireland Science Park, the committee agreed to inquire about the possibility of co-hosting an event with the Committee for Employment, Learning and Committee for Education to showcase businesses located within the Northern Ireland Science Park. So are we happy enough to note this?
Great, yeah.
Okay, great. Now, also tabled today then is correspondence from the Department regarding public sector sickness absence.
Have you a rough idea when that event might be? No? A month even? No?
Oh, no. Who's actually fronting that? Who's actually organising it? Me.
Every day.
Who's actually charged with taking it forward and organising it?
Well, the three committee offices are located in the same room, so between the three committee
All right.
offices...
It shouldn't be too hard to work that through.
So there'll be members of staff from each one.
We could maybe have an indication next week then as to when it might be, so that's good enough. So anyway, to get back to that, the stuff about the departmental public absences, if we're content to forward this correspondence to the Committee of Finance and Personnel for information, agreed then?
Agreed.
And tabled also is correspondence from the Department regarding intelligent energy systems. Unless members have any comments, we're content to note that.
What page are you on?
This is tabled documents.
On what page now?
Let's see, where is it? Some on the front of it.
59. 59, you said?
Oh yes, we're sorry. We need to have a wee bit of a chat around this one. It's the response that we got back into smart and intelligent energy systems. Really don't know what the issue is at the department, but somebody needs to put on their thinking cap rather than regurgitating insubstantial stuff that was referred to us twice before. This was the comment. You remember whenever we raised the issue of the use of smart, the utility regulator said one thing.
They gave us 3 answers ago.
And NIE said one thing, and the department didn't seem to know, and it doesn't seem to know yet how to answer a question. So there are a few suggested questions here for a letter back, which we'll maybe draft. Jim has crafted out some questions here around this to elicit the information that we're actually looking for. So if we draft up this letter, we'll share it with members, and the members are happy enough with that, we'll deal with it that way, okay? Thank you. Right, now agenda item number 7, subordinate legislation SR 2014-60, the gas individual standards of performance regulations. Papers for this are at page 106. Included in the paper cover note with the purpose of explaining the purpose of the rule, a copy of the rule, and it's subject to negative resolution. We did discuss this at SL1 stage at our meeting on the 13th of February and had no comment on it, and it will come into operation the 1st of April. The examiner of statutory rules has no points to raise as regards to technical scrutiny. If we're content for the report to be published on the committee pages of the Assembly website and a link forwarded to all members. So I have to put the question, if members are content with the SR, that the Committee for Enterprise, Trade and Investment has considered SR, the gas individual standards of performance regulations Northern Ireland 2014, and has no objection to the rule. Agreed? Thank you.
Great.
Agenda item number 8, consultations, the implementation of Article 13 and 15 of the Energy Efficiency Directive 2013. It's an EU directive. That's at page 153. And we have the consultation document there. So if members are content to receive a summary of consultation responses when they're received, okay? Agreed?
Agreed, yeah.
Agenda item number 9, and this is at page 209. Which is part 3 of the grid connection terms of reference, and we have that's included at page 209. Okay. So, tabled also is, that's the draft terms of reference are at page 210, but tabled also is an invite from Action Renewables to a grid connection seminar on Thursday the 10th of April. So if members have any comments, first of all, are members content with the terms of reference? Should be at this stage anyway. Agreed? Agreed. Yep. And if we're on the Action Renewables issue, content to ask a member of Assembly Research to attend and report back to the committee.
Great.
Okay, and also...
I might go for a while in the morning, Patsy, that's all right.
Oh.
Are all members invited?
Okay.
I might go for a while in the morning.
And also, it might be an issue to refer into this here, if we consider if members could reflect on individual companies or individuals, in fact, that have had difficulties connecting to the grid, and refer those through to the committee staff here. They may well wish to come along and present some evidence to it. Okay, agreed. Agenda item number 10, research briefing on renewable energy.
Sorry, Chair, just on that, if I could pull you back, sorry for doing that, but I had a talk with Stephen Kelly last week on this very issue. So it might be in order that the clerk maybe communicates with Stephen Kelly and I, manufacturer and I, just because he will have case studies.
Right.
Yeah.
Right, okay.
I think, Patsy, one of the things that worked very well previously in this committee was with the inquiry into research and development, where the committee appointed a rapporteur to go and engage with smaller organisations instead of having small organisations having to go up and present in front of a full committee, that engage with a rapporteur of the inquiry. And
we're talking initially written briefings here.
Written briefings. Oh, that's okay. Well, that's okay. As long as you're not expecting no contract moving that evidence, that's okay.
Okay, agreed. So, move then to agenda item the research briefing, renewable energy development in the public sector. And we have those papers at 2:13. We have a research paper there on renewable energy development in the public sector. And Aidan's here from Assembly Research to brief the committee if required, although I think the pressures of time are probably against us today anyway.
Could we have it maybe...
We can defer it to next week then, if that's okay. And we also have...
Following week.
Sorry, it's the following week. Yes, it's the following week.
Sitting there for 3.5 hours, Patsy.
And we have
enjoyed it.
The research briefing there on the cross-border committee meetings in Europe. So similarly, if we could defer that to the following week again too.
Sure, with that one, there's very little substance to it. It might be...
He's great to set up the frame.
But there might be a pile of questions, Patsy. I'd say we try and get Aidan out of it here.
Pardon?
I presume members have read the research paper, have they?
Yes.
So Aidan doesn't need to make a presentation, so if there's any questions...
No, I know that.
I think we'd have him out of here in 3 minutes.
No, I don't think we'll pull him.
Can't do it justice.
To be fair, to do it justice, well, the second one maybe there's not so much detail to go into, but certainly the first one there would be. So, Aidan, sorry for bringing you down here and having to sit through all of that, but unfortunately we had a lot of stuff to get through there. So, agenda item number 12.
Taking the answer.
Is the correspondence. Jim, do you want to take us through the correspondence there, please, just?
Chair, the first thing from Go On UK to yourself, Chairperson, regarding cross-sector programme to build the digital skills of people, businesses and charities in Northern Ireland.
I was wondering, just had they been in touch with Momentum and the likes of those group, and I'm sure they have, but if they're coming over at some stage, it might be helpful if we could communicate with them, say thanks very much for their letter, and if we could communicate directly with them and say if they're coming over at some stage too.
They're coming on the 15th of April, Patsy, they're inviting you.
All right, sorry, I didn't notice that. But where is it?
Bottom on page 234.
Oh, right. 15th of April.
All chairs get one of this.
What day of the week's that one? Right.
It'll be Easter week, Patsy. Holy Thursday, maybe? No, it's Tuesday of Easter week.
That's during recess, Chair.
During recess? Well, sure, we could see if we could take a race up to that.
All chairs would have received an invitation.
Yes. Okay, so if you mark me down for that, and just anybody else wants to attend, I'm sure they'll be more than welcome. Okay, right, Jim.
From the Department of Environment regarding Exploris. So, if members have any comments on that or contention?
Could we share that just with the Exploris group there, the action group? Could we please just? Agreed. Yep. Thank you.
From the department to NIPSA regarding consumer representation in Northern Ireland at page 238.
Okay, read the note.
Great.
From the utility regulator to the chairperson.
Patsy, sorry, just on the argument from the department to NIPSA. This is something that NIPSA have raised with me. Can we request a written briefing from NIPSA as to what the actual issue here is? Because there's some problem over whether NIPSA members were consulted over the future of the Consumer Council. And I don't think this gets to the bottom of it, so
well, okay.
We get a written briefing from NIPSA. The issues
Read then, we ask them to write to us and explain what the issue is. Okay, read. Right, Jim. Next one's really
from the utility regulator to the chairperson regarding the committee review into electricity policy.
We wait with interest.
Read the note. At the
Have
moment,
we had
anyway.
such a holding letter from the department yet on Part 1? No.
The response to part 1 will be in papers for the next meeting. It has arrived, yes.
Okay, good.
Very good.
Yeah.
Right.
And have the department got Part 2 of the inquiry yet?
Yes.
Good. Brilliant.
Right, okay. Right, Jim.
From the Minister of the Committee for Culture, Arts and Leisure regarding Loughney Fishermen's Association.
Right.
And then tabled today, correspondence from the Committee for Finance and Personnel regarding post-project evaluations.
Okay.
So if members are content to note that.
Note.
Then also tabled is correspondence from the Committee for Finance and Personnel regarding the Carnegie Trust. There's a report associated with this, and a link to the report was emailed to members yesterday.
Okay.
So if members are content to note that.
Agreed.
And then also tables correspondence from the Committee for Culture, Arts and Leisure regarding the inquiry into inclusion in the arts of working class communities. So I was content to note that as well.
Great. Right. Agenda item number 13. Any other business?
Sorry, Chair, tabled correspondence from the Department to the Committee for Agriculture and Rural Development regarding the Agri-Food Loan Scheme.
All right, okay.
On any other business, Chair, have we agreed? Did we agree there in that session to write to someone on the issue on single farm payments for these solar panels? Because although I would like it to be the case, I'm not 100% sure that the DARD or Europe really have factored this in. And if they haven't factored this in, this could be a massive minefield for landowners. And
are you suggesting we write to the department?
I think we need to write to DARD to see, but to do that, maybe we need to write to the DARD committee too.
You'll be writing to yourself then, Paul.
Unfortunately, but I think it's something. This could prove a barrier to this renewable energy that means it wouldn't incentivise.
Right, okay. We can get that clarified then.
But they're hardly active farmers,
specifically in relation to single farm payments, and if in fact the use of the land for renewables can affect the potential to draw down single farm payments.
I suspect it will. I really do.
But of course, we're taking a neutral stance, Patsy. We're only asking for information.
We're asking for clarification around it.
We're not lobbying for them to be removed.
No, absolutely not.
Not yet. Not yet. Wait till we find out, and then we'll figure out what to do.
Don't go there, Gordon. Right, okay. Health and Safety Codes of Practice, correspondence from the Department regarding the proposed revised Health and Safety Approved Codes of Practice. Consultation documents, including the approved Codes of Practice, is available from the Committee Office. Are we content then to await the outcome of consultations? Agreed? Agreed. Then, MLA Scientist Exchange Scheme. Phil, you had asked that this be raised under AOB.
I tell you, forget Jim. Through Politics Plus, some MLAs are engaging with scientists to discuss a range of issues, and they've been asked to come back to committees to present evidence at committees, but we're too busy on Thursdays to facilitate such a briefing. So Jim had suggested maybe we could look at it Tuesday lunchtime.
To do with these, with a scientist?
For a professor to come to present to the committee on
what subject?
Something to do with something to do with the exploration of oil and gas and stuff.
Oh, brilliant.
Something you'd be interested in.
Conventional.
Right. Okay. Right. We agreed to do that over lunch someday.
Aye.
Right. Okay. Grand.
No, but as much good.
Hope you have a good lunch.
Final thing is, date, time and place of the next meeting, Thursday the 27th in room 30 in Parliament Buildings here at 10 o'clock. Now we have a closed session now.
I'm not finished yet, Gordon.
Very briefly, Gordon.
Agenda item number 15.
Very briefly. Or we can defer it if you like. It's a research briefing on the Specialist Advisor on economic policy. Now, To give this justice, I think we're going to have to defer this to another day, you know.
Great. Can I make a proposal that'll take, but I'll just do it instead of asking. Can I ask that we try and get some information on Paul McFlynn that works with the Nevin Economic Research Institute to see whether he would be appropriate as well. There's a couple of names down there under consideration, but I think Paul McFlynn would be very good if we could explore the possibility.
Okay, that's us right up then. Thanks very much indeed. So, covered a lot of detailed stuff there today.